Okay, we are in live. So, good evening, members. Yes. I welcome all the members and our today's speakers, Saravana Kumar sir and Bala sir. They are in online now. Welcome, sir. Today's topic will be offences, penalties, and arrest provisions in GST, which will be handled by Saravana Kumar sir, and value additions to clients through ITC, which will be handled by Balasubramanian sir. We'll have our play session at the end of the session once both the speakers have completed their sessions, so that you can clarify your doubts at the end. So now over to you, sir.
Very good evening, members. At the outset, I would like to express my heartfelt thanks to Madurai branch and special thanks to the organizer, chairperson, and secretary for this excellent opportunity of sharing our views and experience in this GST law. So the topic assigned to me is offences, penalties, and arrest provisions in GST. So broadly, our agenda would be to discuss the relevance of adjudications in GST, and thereafter we would see various types of offences. So what are all the offences which are classified? Because it has become order of the day. Everyday newspapers, we see the news relating to arrest of many business person because of fraud, GST frauds. We hear a lot of news relating to GST fraud. And we think that these GST frauds are no way connected to our clients because those transactions or activities which we perceive to be and not a fraud, it's just a non-compliance, may be fraud in GST. So that may also come within the purview of fraud. So we'll have to be very alert in looking into those transactions. So we are going to see the types of offences in GST, and we are going to discuss about penalties prescribed for these offences in GST. And lastly, we will analyze, probably I can say, in-depth analysis of arrest provisions in GST. So broadly, these are the four points we are going to discuss for today's session. So let's first move on to our first topic of adjudication in GST. What do we mean by adjudication? Adjudication, the dictionary meaning is nothing but settling a case or coming to a conclusion. This is the or assessing a taxable person. That is what we call an adjudication. So in GST, I'm just giving a practical example. Can an officer go to a taxable person's premises and can he ask that person based on examination of your GST returns filed? I am of the view that you have short paid a GST of say 20 lakh rupees. So you are required to pay the 20 lakhs. I'm giving you 1 day time. So by tomorrow this time, you should remit the tax. Otherwise, I may have to initiate legal proceedings against you. Is it possible to a taxable person? So that is what we are going to analyze in GST. Okay, before we analyze this adjudication, there are certain basic points that we must be conversant with that. Article 245 of Constitution of India, which tells that no tax can be levied without an authority of law. So now we are all in this COVID situation. Suddenly, if the government, Tamil Nadu government wants to levy a COVID cess to all the people of Tamil Nadu, so from all the sales made from tomorrow, the government wants to levy a cess called COVID cess. Is it possible for them to do that? Obviously, it's not possible because Constitution Article 245 says if at all any tax is required to be collected by the government, that can be only through an authority of law. An enactment of law only pave the way for collection of taxes. Okay. That being said, can anything and everything promulgated by as law by Parliament and assemblies be treated as law? There has been many cases, not only in this GST, in as well indirect taxes like incidental excise, VAT, and even other civil and criminal cases. The courts have consistently held that if any law, to the extent that it is ultra vires the provisions of Constitution of India, is required to be struck down. That's what courts have held. Meaning, even if a law is enacted by Parliament or state legislature, that must be in agreement with the provisions of Constitution of India. If any provisions of a particular enactment of a state or a center is otherwise the Constitution, is not a law at all. So that is the basic point we must keep it in mind whenever we read any law, especially tax law for that purpose. So coming to our original example of a tax officer visiting an SSC and asking him to pay a tax of rupees 20 lakhs, is it possible for him to demand? Suppose on 4th of April, he visits the premises of a taxable person and he verifies the returns filed by him, he verifies the accounts produced by him, and he comes to a conclusion that this 20 lakhs rupees is the short payment for the year 17, 18 and 18, 19, and by tomorrow you need to pay. Can he tell that? Obviously, it is not possible for him to tell, because any kind of tax law, one principle must be followed. That principle is called principle of natural justice. Unless, if any, a principle of natural justice is followed, any demand is not a demand at all. An officer, a proper officer in GST, we call the officers, even though the designation for central and state officer are different, their superintendent, their commercial tax officer. So likewise, here in GST, the common designation, name given to the officers are proper officer. So if when a proper officer passes an order, it must be a speaking order, and principle of natural justice must have been followed. What is this principle of natural justice? There are two prominent rules which are being widely talked in this principle of natural justice. What are those two rules? Nemo judaxin res suo and rule Nemo judaxin res suo, which means that a man should not be a judge in his own case. Meaning, if he examines or if he adjudicates a case wherein he either directly or indirectly be a part of it, he should not deliver judgment for that case. So in this principle, broadly three biases are being talked: personal bias, pecuniary bias, departmental bias. Suppose I cannot give a judgment to a company wherein I hold 20% of shares. So that is the first principle of natural justice is being widely taught. And the second principle is the very, very important principle, that is rule of audi alteram partem. What is this rule of audi alteram partem? Meaning, no person should be condemned unheard. Meaning, if in our example, the officer tells the taxable person, you need to pay 20 lakh rupees as a short payment of tax, and for which I am going to demand 20 lakh rupees as tax, demand so and so amount as interest, demand so and so amount as penalty. Then he must be given an opportunity to say what he wants to say. He must be given an opportunity to say what he wants to say. He must be given an opportunity to exhibit his point. I may have gathered some of the evidences. He may have some evidences. He may produce it to me. This is what the parameter based on which you have come to a conclusion, but those conclusions are wrong in my opinion, because the facts and figures are this. So please consider all these evidences which I am producing to you now, and thereafter you come to a conclusion whether the tax is payable by me or not. If at all payable, what is the quantum of tax payable? So these process of law, due process of law must be followed. That is what we call it as rule of audi alteram partem. That is the predominant principle of natural justice must be followed in all types of litigations, adjudication. So next, in GST, if at all a tax is to be demanded by the officer, what are the ways through which he will demand it? Two important sections are there in GST. Section number 73, section number 74. These are the two sections giving power to officers to raise demand to tax. Meaning, first of all, the officer has to give a show cause notice to him, asking for why should not this amount of tax be collected from you? Because in my opinion, it appears that you have short paid this amount of tax. 5 categories of situations are envisaged in these two sections. What are those 5 categories? Taxes not paid, taxes short paid, input tax credit wrongly availed, input tax credit wrongly utilized, and refund erroneously obtained from the department. These are the 5 situations wherein a case of issuing show cause notice rises for the officer. So these 5 cases are dealt in 2 sections. Section 73, section 74. In case, in the opinion of a proper officer, the taxable person has not paid taxes or short paid taxes or refund, erroneous refund, for any reason other than fraud, willful misstatement, or suppression of facts to evade tax, then he will invoke the provisions of section 73. In case if these demands are raised by reason of fraud or willful misstatement or suppression of facts to evade tax, then he will use the power given in section 74. If it is because of fraud, suppose deliberately I know tax is leviable, but deliberately I have not paid. If that being the case, the officer will issue show cause notice under section 74. What is the difference between section 73 and 74 in terms of consequence? Section 73 is for all reasons other than fraud. Section 74 is for all reasons for fraud, willful misstatement, suppression of facts. Then what is the line of difference for these two sections as far as consequences are concerned? Section 74 empowers the officer to demand tax for a period of 5 years. 5 years from the due date of annual return. And section 73 gives powers to officer to raise show cause notice for a period of 3 years from the due date of annual return. For 17 to 18, due date for annual return is for last 3rd January. So January means from January 2020, 5 years for 74, 2025, January 2025. And for 3 years, 2023 for 73. So this is how the section operates. The section operates as far as the issuing of show cause notice is concerned. After issuing show cause notice, as I said, principle of natural justice must be followed. And based on the reply given by the assessee, the officer has to come to a conclusion and he has to pass a speaking order. When it comes for speaking order, suppose an officer issues a show cause notice on 4th of April 2020. And he must be given an opportunity of being heard. Who? The taxpayer. So suppose the officer gives a personal hearing. On 4th of April, he issues a show cause notice and he insists the taxpayer to come to his office on 5th of April for personal hearing. If he comes for the personal hearing and he adopts the reply given by him, suppose if he has not come for the personal hearing, can he issue an order on 6th of April? 4th April, show cause notice is issued. 5th April is PH date, personal hearing date, and 6th April is order date. Can this happen? Certainly not at all. Because the reason is, whenever we have seen that principle of natural justice must be followed, that is, opportunity must be given to the assessee. What is that opportunity? Reasonable opportunity must be given. So reasonable period must be given. If the assessee asks for an adjournment, it is the officer is duty bound to give adjournment. And there has been many cases in Central Access and Service Tax Law. Orders have been set aside by Honorable High Courts and Supreme Courts of India that wherever adjournments were not given and principle of natural justice was not followed, the orders were required to be set aside by Honorable High Courts and Supreme Courts. So now we are coming to our today's discussion, offense. What is an offense? So we are going to see what are all the types of offenses in GST, and for these offenses, what are the penalties prescribed, and thereafter we will move on to arrest provisions in GST. When an arrest can happen, who can arrest, who can be arrested, and what are the remedies available for the person who is going to be arrested. So these are the discussion points for us today. What is an offense? Offense is not defined in GST. We take a clue from section 3, subsection 38 of General Process Act, which tells that offense shall mean an act, any act or omission made punishable by any law for the time being in force. Say, for example, according to section 122, no person shall supply goods or services without an invoice. So, if any person supplies goods without an invoice, then it is an offense. Or there are certain acts which are not to be done by a taxable person. So if that is done by that taxable person, it means that he has committed that offense. Once an offense is committed, he is punishable by the provisions of GST Act, penal provisions to come into picture. Here, an intention to commit is not an offense as held in many cases. Broadly, offenses in GST are classified into three categories: supply related offenses, tax and ITC related offenses, procedure related offenses. How a supply, how a sale has to be made, or how a service is to be rendered, those kind of offenses, supply related offenses. Wherever there is short payment of tax or erroneous availment of input tax credit, those are tax and ITC related offenses. Suppose you are required to take registration, but if you fail to take registration, and if the registration particulars are incorrect or insufficient, then that is the procedural lacuno. That offense is called procedure related offense. So I've just given an example for these kinds of offenses. Specifically, offenses are listed under section 122. Totally 21 offenses are listed in section 122 subsection 1. We will discuss those offenses, and it is very important for professionals or members because while certifying 9C, DSTR 9C, the audit report reconciliation statement, it is imperative for us to analyze whether the assessees for whom we are certifying are getting hit by any of these offenses. And while we discharge our professional responsibility, is it mandatory for us to make a report on the or qualification in the report, and it is mandatory on the part of us to alert the assessee also wherever he gets hit by any of these offenses. Let's discuss these offenses. So we will discuss first supply, ITC, and tax related offenses with examples. For all kinds of this 21 offenses, penalty prescribed is, and very importantly, section 121 subsection 1 talks about taxable person, meaning any taxable person who commits any of these offences is liable for this penalty. Who is a taxable person? A taxable person is a person who is registered or liable to be registered. A person's turnover has crossed 20. He is also a taxable person. So section 122(1) will apply to him also. Both registered person and also the unregistered person who fails to take registration in spite of the fact that he is required to take registration. And for all these 21 offences, penalty prescribed is penalty equivalent to tax amount. Penalty equivalent to tax amount or rupees 10,000, whichever is higher. And in case of input tax credit erroneously taken, amount of input tax credit erroneously taken, or 10,000, whichever is higher. In case of short deduction or non-deduction or non-remittance of TDS and TCS, amount equivalent to that TDS or 10,000 rupees, whichever is higher, is the penalty prescribed for all these 21 offences. As far as procedure-related offences are concerned, if those procedural lacunas cause any tax evasion, then amount of tax evaded or rupees 10,000, whichever is higher, is the penalty prescribed for section 122 subsection 1 is the penalty prescribed. Let's now analyze what are all the offences which are prescribed. First offense is supply of any goods or services or goods without issue of any invoice, or issues incorrect or false invoice. What is the difference between the former and the latter? Supply without issue of invoice, or in issuing invoice incorrectly with regard to any such supply. That's what section 122(1) says. Clause 2 says invoice is issued, but supply is not made. This is where the fake billing everything comes. Issues any invoice or bill without supply of goods or services. So what is that clause 1? Clause 1 says supply of goods without even and a counter transaction. And what is that issuance of incorrect or false invoice? I am selling product X. Product X is taxed at 18%. But the customer doesn't want to give me 18%. So now what do? Even though I sell product X to my customer, actually I sell product X to my customer. In the invoice, I put product Y. As if I am selling product Y, I pretend that product Y is being sold. Product Y is taxed at 5%. Obviously, it is an incorrect or false invoice with regard to any supply. The penalty clause would Issue of invoice without supply of goods or services is fake billing. We will analyze the various categories of this fake billing later. Next, collects any amount as tax but fails to pay. Very, very important, sir. Clause 3, collects any amount as tax but fails to pay the government beyond a period of 3 months from the due date. Most of the cases, PV is belatedly filed would come under this clause. Suppose those persons, because of working capital crunch or any other reason, if GST 3B return is not filed, not GSTR 1, because GSTR 1 is a statement of outward supply, we report sales transactions to the government. But as far as 3B is concerned, actual tax revenue goes to the government. When GSTR 3B is belatedly filed beyond 3 months from the due date, obviously that person is hit by this provision. And the officer may initiate levying penalty. And here one important question may come. Sir, suppose November, December 2019 GST return is being filed only in April 2020. So taxes obviously paid later. In February 2020, can an officer issue penalty notice? Obviously, he can invoke this provision. But not the penalty cannot be levied for the end, not for the entire amount, because the wordings used here is the taxable person collects any amount as tax but fails to pay the government. Meaning, yes, he should have collected tax. What is collection meaning? It means actual realization of sale proceeds, and it is not that whatever I have charged in my invoice, that is not enough. So out of my 2 months sale, to the extent of debtors, this provision is not applicable. So wherever the collection doesn't happen, this provision is not applicable. We have to be mindful of that. Many settled the principles, case laws are there for this. And the next clause collects any tax in contravention of the provisions of this act but fails to pay the same. Meaning, a product is taxed at 5%, but erroneously I have collected 12%. So because it is excessively collected, I cannot retain this amount. Along with this differential amount, this needs to be remitted to the government. In case that is not remitted beyond a period of 3 months, then this penalty provision would come. And the next is TDS, TCS. Clause 5 is TDS, fails to deduct tax or deducted tax is not paid or short deduction. Likewise, fails to collect tax or collected tax is not remitted or short collection. Penalty would come. 122.17, that is clause number 7, talks about very, very important here, sir. Takes or, the word used here is or, not and. Takes or utilizes input tax credit without actual receipt of goods or services, or both, either fully or partially in contravention of the provisions of this act or rules made thereafter. Here also fake billing without receipt of goods or services. It's just for the sake of input tax credit is taken. This will get hit by the provision. Fraudulently obtains refund of tax. Next provision is fraudulently obtain refund of tax under this act. Either by means of fake invoice, input tax credit is taken, and that input tax credit is ultimately received as refund. This is an offense. And say, for example, for certain types of refunds, certain types of input tax credits are not allowed. Say, for example, your input tax credit for LUT export under LUT, only inputs and input services are allowed to be received as refund and not capital goods. And in case any person includes capital goods also and claims the same as refund, obviously he gets hit by this particular clause. Likewise, for inverted tax structure, the allowed input tax is only for inputs and not for, the allowed refund is only with respect to inputs and not for input services and capital goods. That is also included, obviously, that person is by this particular clause. But anyhow, officer would check this. Will he not be restricted in claiming the refund? With effect from September 2019, all refund procedures are made online, and you will attach as given in circular number 125, dated 18th November 2018, what are all the documents to be uploaded is given there, and even it is as amended by section circular number 130 of April 2020 circular. It says that you need not upload the copies of invoice, and other than that, what all the documents to be required to be uploaded is alone there. Based on the information given by you, the taxpayer, the officer will come to a conclusion and he will pass a refund order. He will sanction the refund order. There, erroneously, even in books of accounts, some input services are wrongly classified as inputs, and inputs are wrongly classified as input services, and ultimately erroneous refund is received. Obviously, this particular clause gets hit, and very important as far as this refund is concerned. And next offences takes or distributes ITC in contravention of section 20, that is input service distributor. When an input service distributor, when he erroneously distributes credit, he will also get hit by this. Let's now discuss about this fake billing, possible cases of fake billing. Why normally a person goes for fake billing? Fake billing is not only the case where input tax credit is taken without actual receipt of goods, it could also amount to increasing your turnover for the purpose of bank OD. Many persons are showing sales in GSTR1, and the same is filed in income tax return also, but no taxes paid in 3B. All those cases will come under GST fraud. Profit adjustment for income tax purposes. Getting input tax credit bill, claiming the same as expenses without actual purchases, and claiming input tax credit and also expenses claimed in income tax, both are friends. That is also viewed as GST fraud. And fraudulent refund in case of it. How does this happen? We have given 4 scenarios of this circular trading, or what you call fake billing, GST frauds. Case 1, A sells to B, B sells to C, C sells to D, D to E. So everybody takes input tax credit, but ultimately A never files the return. He never files, or he will file GSTR1 and he will not file GSTR3B, and he will vanish. He will not be there. But it is just because it is available in 2A, obviously presently you see the extent of notices being received is for entries which are not appearing in 2A. And 2A versus 3B, what do you call the GSTR 1 versus 3B, some of the jurisdictions have started sending notices, but not all the jurisdictions started sending notices. Using this lacano, frauds are happening like this. The chain of bills are traded, and any of the persons vanishes, and he may file GSTR 1, he will not file GSTR 3B, and all other persons in the chain would take input tax credit. Case number 2. Severe consequences are there in case of arrest. We will see those provisions. Case number 2, A, B, C, D, again A. So just for improving his turnover, increasing his turnover, A may sells to B. Ultimately, the lost buyer will again sell to A. Thereby, he will not pay tax always. He will always adjust his input tax credit. There will not be any cash outflow. So in this way, fraud happens. And case 3 is A to B, C, A sells to B, B sells to C. But here, A will sell to B, but he will not invoice, tax invoice to B, gives tax invoice to B. Rather, he will give tax invoice in the name of C. So C has not purchased from A. So B has purchased from A, but he will not get invoice from A. So obviously, what he'll do, he will not disclose his turnover, both purchase turnover and sales turnover in his return. 100% unaccounted transaction by B. So A would obviously pay the tax, and C would take input tax credit. So he would sell some goods there. So he will take input tax credit, and he will not pay tax to the government. This is how the fraud happens. And like case 1, the ultimate person, he will be an exporter. He will get refund of the same. So this is how fake billing means. Actually transacted. This is subject to severe consequences of the penalties and arrest, which we will see. Now, I said that even some of our genuine clients may get hit by this fake billing. How? Even in our earlier example, some of the persons who have obtained bill trading, portion of which may be their genuine trading, portion of which may be from bill trading, and the genuine part would have come to our client. There has been cases from investigation being both central and state officers started questioning many companies that your purchases are bogus. Even though the purchases would have been actual, bank payment would have been made, the department doesn't want to hear that this is a bogus. How do we substantiate our claim that we have made only a genuine purchase? I'm talking about a business person, taxable person who has made genuine purchase, but the department is claiming that you have not received goods, but you have taken input tax credit. If that being because your supplier is vanished or your supplier has done a bill trading, somewhere the cases would come. How do we substantiate it? It is practically happening. You may tell the department that, sir, I have made bank payment to my supplier. He has given me a tax invoice. It is there. The department may not accept it. Strong internal control system must be there. Goods received note. GRN must be there. Computer generated GRN must be there. Quality testing must be there. E-way bills must be there. Even if they may not, accept that. Right? The proper CCTV footage of automatic capturing of your trucks, especially the number plates and your toll gate receipt. If you start getting toll gate receipts from the trucks which are coming inside, if those are kept safely, and that will act as a proper substantiation for genuine purchases. So this is how our department also works. We must be alert in those cases. So these we have discussed at the time of discussing the offences. We can move on to procedure-related offences. So far we have discussed tax-related offences. Now we are moving on to procedure-related offences. In tax-related offences, this is only very important point, sir. And this is an amendment in April 2020, section 122, subsection 1A has got inserted only from April 2020. What is this talk? Mastermind of a transaction. Many big business people who are indulging in fraud, they will not do business in their name. They will have many persons who will do business, but they will not be in charge of those business. This person will be in charge of this business. Suppose a person who does 500 crores of business in the name of his driver, car driver. The car driver would sign everything. But he will. So in this case, before this amendment, what has happened? What all the offences we have discussed will be towards the driver and not towards this person. So to curb these particular Lacano, section 122, 1 capital A has been included. It says that not only the taxable person, also a person who retains the benefit of that fraudulent transaction and at whose instance such fraudulent transaction has been conducted, that person will also be treated at par with the taxable person. All the penalties, arrest provision would also apply to that person. That is what section 122, 1 capital A tells us. Next important point, procedure related offences. What are the procedure related offences? Directly, it may not involve a tax offence, but because of this procedural lacano, it may cause a tax offence. What are all the offences? Quickly, we will see because we have got another 25 minutes. I'll try to cover the entire points. Falsifies, very important, sir. Falsifies a substitute financial records. Clause 9. Substitute financial records are produces fake accounts or documents or any false information in the written also, with an intention to evade payment of tax. All unaccounted transaction, wherever sale is suppressed, the extent sale is understated in the books of accounts. What's the penalty is 10,000 unit control? It is not so. Penalty, of course, it extends to the amount of tax evaded, penalty equivalent to tax. Next consequence is confiscation. So confiscation of stocks is possible. Arrest. We will discuss the arrest provision. Section 132 and section 69 prosecution, which tells the quantum of tax evasion. If it is up to 1 crore, more than 1 crore, below 2.5, 2.5 to 5. So based on this quantum, arrest imprisonment is specified. But this is one such offence. If this is proved, irrespective of your tax amount evaded, if books of accounts are falsified, then arrest would apply to this kind of offence also. We'll discuss 6 months imprisonment or fine or both. Not only the person who has committed this offense, also the person who has causes him to commit that offense. Very, very important, sir. Who causes him to commit that offense. It could be even his employees, finance manager, his CFO, the person who looks after taxation matters. So all those people will get hit by this particular offense. Very, very important. Falsities are substituted. At the same time, giving incorrect particulars in written with an intent to evade tax. If that is proved, this will get hit. And other offences, failure to take registration, as we have seen, this is already applies to taxable person. So this is very important. Next, furnishes false information in the registration particulars. Very, very important, sir. I'm giving a scenario here. Most of the associates may get affected, but they all can be saved provided they are alerted and proper action is taken. What is that? Suppose if a person has 5 place of business, but all place of business is not updated. Every month, as a part of month close activity, whether all the place of business, gudowns, corporate office, marketing office, wherever it is there in the state or outside the state, is it updated in the registration portal? If a particular godown is not updated, when an officer comes, that is the sufficient ground for him to conclude that all the stocks which are there are unaccounted. You have failed to inform the government because they have not at all updated in GST portal. It is very important. Of course, we have got defense mechanism, but then it will be a very cumbersome process to mitigate the extent of action taken by the department. So always see whether the particulars given in registration certificates are complete and correct, especially in case of updation of your places of business, whether all places of business are correctly updated. And then the next offense is obstructing or preventing an officer from discharging his duties, and any person transports any taxable goods without the cover of documents, without e-way bill, without tax invoice. So those kinds of offences are covered. Suppression of turnover, we have discussed. This is very important. Clause number 15. Failure to keep, maintain, or retain books of accounts. Section 35, read with Rule 56, clearly tells what are the types of books of accounts to be maintained by a taxable person. What are all the books to be maintained by a manufacturer, trader, service provider, agent, transporter, works contractor. List of books of accounts are maintained. Common flaw made by all these categories of persons is stock. Section is very clear in its wordings that how stock book is to be maintained. Say, for example, a trader, what is this opening balance? What are all his purchases item wise, part number wise? What are his sale transaction? What is the closing balance? A simple stock record, what the department expects, GST Act expects. In case of a manufacturer, byproduct, joint product generated, waste, scrap, sample clearances. So as updated. In case of a works contractor, project-wise stock, project-wise input services, capital goods used. These are the details which are required in books of accounts. Failure to keep those books of accounts as prescribed in GST Act will call for penalty as per this section. And failure to furnish document or information called for by the officer or any false information is given, this offence will come. And the next offences are for transporters or who keeps goods which are liable for confiscation. What are all the goods which are liable for confiscation? We have discussed. Section 130 tells 4 parameters are given, which tells that whatever offences we have discussed, all unaccounted transactions. If any goods are moving without the cover of document, any goods which are not accounted, which is being sold, if those goods, if a transporter accepts, the transporter is also liable for a penalty. That is what this section says. Tampering any records, destroying the material evidences gathered, all this amounts to offences for which penalty is prescribed. These are the 21 offences given in section 122 subsection 1 for which penalty has also been prescribed. Section 122(2) talks about a registered person. So even a registered person, after following due process of law, officer issues section 73 notice or 74 notice, first notice, and thereafter he comes to a conclusion that this is what the short amount of taxes paid or erroneous availment of input tax credit or erroneous availment of refund, then the penalty prescribed. Or reason of fraud, if it is due to fraud, tax is not paid if he concludes that. So here there is a huge amount of reliance to be placed on S2L indirect tax decisions, any decision. How do we defend a penalty? I have given in one slide. If the time permits, we will discuss that also. How do we defend? In case the officer concludes that tax is not paid by reason of fraud or willful misstatement or suppression of tax, then the extent of penalty will be equivalent to 100% of tax amount or 10,000, whichever is higher. And in case if it is not by reason of fraud or willful misstatement or suppression, then the tax penalty will be restricted to 10% of tax not paid or rupees 10,000, whichever is higher, is what the section 122 subsection 2 says. So these are the possible defenses which may be whenever a show cause notice is issued against the taxable registered person, demanding higher penalty. Very important, sir. If fraud is concluded, two consequences. Consequence number one, 100% penalty. Consequence number two, the demand period will be extended to 5 years instead of 3 years. Period of limitation will be extended. So if it is not by reason of fraud, it is 3 years, 10% of the tax amount alone will be the penalty. What are all the possible defenses we can make? These are the possible defenses which have been accepted by courts of law, both High Court, Supreme Court, tribunals, and even at Commissioner Appeal level. So these are to be proved to be proper officer. No malified intention or suppression of tax. In general, let me summarize. Many amendments have come in GST. When an amendment has come, it is not known even to the officer. And so when that being the case, how can a normal business person be able to keep hold of all these amendments? So this can be one of the defense. And different judgments are given by advanced ruling authorities. And even government, when it gives a circular clarifying particular provisions of the act, the government itself made a U-turn. This clear-cut example is your circular number 105, which tells that for discount, certain situations are specified wherein the discount is given to the wholesaler, for which it is regarded as a value of supply for which tax is leviable, and thereafter the government itself withdraws that circular. So the provision is not clear by a person who makes the law. How can you make a taxable person or a registered person to understand the nitty-gritties of law? So this could be one of the defense which may be put forth there. And wherever revenue neutrality is there, say for example, reverse charge is not paid. When reverse charge is not paid, obviously we can plead before the authorities that after payment of reverse charge, obviously I'm going to take input tax credit. There is no revenue leakage for the government. Of course, we are liable to pay interest. So this can be treated as one of the defense against the levy of penalty. So these are the various parameters based on which you may go ahead in defending the penalty provisions whenever it is removed. Other important penalty provision I will cover because another 15 minutes is there. So I will cover arrest provisions and thereafter I will come back to other penalty provisions and confiscation provisions if time permits. Prosecution. Considering the importance of this prosecution and arrest provisions, I am moving on to section 132 and section 69 of GST. Here, for the purpose of arrest and prosecution, offences are classified into two categories: cognizable and non-bailable offence, non-cognizable and bailable offence. What is cognizable offence? When a proper officer, let us assume police officer, when a police officer, he himself can arrest a provision according to provisions of a law, that is called non-cognizable offence. When a police officer does not have power to arrest a person without an arrest warrant, that is called cognizable offence. Bailable offence, as the name suggests, the police officer who has arrested himself has got power to give a bail, bailable offence. Non-bailable, without the magistrate, is non-bailable. That is what we call it as non-cognizable and non-bailable, non-cognizable and bailable offence. In GST, various offences we have discussed. So these offences are given under section 122. Most of the offences are finding a place in section 132. 132 talks about prosecution. What are all the offences which are liable for imprisonment? Section 132. Power to arrest draws from section 69. So prosecution tips for these offences, invoices not, is broadly these offences cover unaccounted supply. Number two transactions. So if the number two transaction or erroneous availment of input tax credit or fraudulently availing input tax credit or fraudulently availing refund of tax. This fraudulent is not anyone who gets bill trading sort of thing. Even an ineligible credit department will always conclude that if any amount is not paid, they will come to fraud. The defense we have to put forth before the department. And now, whenever these offences are committed, the arrest provision, imprisonment provisions are enacted in GST law based on the quantum of tax evasion. If the tax evasion is more than 5 crore, then the imprisonment is 5 years plus fine. And this offence is classified as cognizable and non-bailable, meaning if the commissioner has reason to believe, according to section 69, if the commissioner has reason to believe that if a person has evaded tax for more than 5 crores of rupees, he doesn't need any warrant, arrest warrant. Based on authorization from the commissioner, even an officer not below the rank of an assistant commissioner or a deputy commissioner of GST, central GST or state GST can arrest a person without arrest warrant, and it is non-bailable. If the tax evasion is more than 2.5 crore but less than 5 crore, imprisonment is 3 years plus fine, but it is non-cognizable, and for these offences, arrest warrant is required. And for more than 1 crore, less than 2.5 crore, 1 year plus fine. Here also, it is regarded as non-cognizable, meaning arrest warrant is required. There is some incongruity between section 69 and 132, meaning some sort of difference in meaning between section 132 and section 69 that courts have recognized also, because here more than 2.5 crore arrest warrant is required. But when you see section 69, which tells that when a commissioner has reason to believe that up to 2.5 crore, he can ask the person, deputy commissioner or assistant commissioner, to go and arrest the person. So that is what we are given. So overall, arrest warrant is required for offences more than 5 crore. Arrest warrant is not required for more than 5 crore, required for below 5 crore. So this is what offences specific. And there are certain offences which are also non-cognizable and bailable, irrespective of the quantum of tax evasion. As already told, falsification or substituting financial record, falsifying the financial record, or obstructing an officer from performing his duties, or tampering in evidence gathered by the officer. If these are proved, irrespective of the quantum, the imprisonment with 6 months or fine or both. This is what provisions as related to arrest. Let us now discuss various cases pronounced, judicial pronouncement in case of arrest in GST law. Article 21. It is imperative for us to analyze Article 21 of Constitution of India. What does that article say? No person shall be deprived of his life or personal liberty except according to a procedure established by law. What do you mean by life or personal liberty? Whenever a person is going to be arrested, it must be ensured that his life and personal liberty is always protected. Except, so whenever a person is to be arrested, it must be according to the procedure laid down in an enactment. Yes, held in Menaka Gandhi's case, constitutional bench in case of Menaka Gandhi's case, it has been held that right to live and with human dignity, the expression life or personal liberty has been held to include the right to live with human dignity, and thus it would also include within itself a guarantee against torture and assault by the state or its functionaries. Just like that, arrest cannot happen. Here, very, very landmark judgment given in case of D.K. Basu's. For Article 21, D.K. Basu's case. It is imperative for us to spend some time on this D.K. Basu's case. This case was delivered in the year 1987. So it was the period wherein no stringent provision was there as regards for officers to arrest a person. If they have got any suspicion in their mind to arrest a person, they may go ahead and arrest. And there were scenarios wherein many deaths happened when persons were in the judicial custody. So one Mr. D.K. Basu, a social activist, filed a writ petition. He has filed a PIL, public litigation, wherein it was held by Honorable Supreme Court of India. Whenever arrest happens, proper procedure must be followed. What are the procedure to be followed? Detailed guidelines were given by Supreme Court of India. What are all the procedures to be followed whenever a person is to be arrested? The police officer, the proper officer who comes, he has to prove his identity that he is from the department. He has to give a memo. The recording must be done in a register that must be handed over to the magistrate within 48 hours. So, likewise, detailed guidelines were given in the judgment, particular judgment, D.K. Basu's case. Later, these guidelines were ditto incorporated in section 41 of CRPC, Criminal Procedure Code Act. Tells that before arresting a person, these are the guidelines to be followed. Wherever any act for the time being in force tells that or requires that a person may be arrested for these offences, that law must provide the procedures to be followed before arresting a person. This is stated in criminal procedure. When we see central excise or customs or service tax law, procedure for arrest were given, but procedures were not there in GST law. When procedure is not there in GST law, it is obvious that criminal procedure code must be followed. So whenever there is a flaw in the procedure adopted by the officers in arresting a person, obviously this can be given as a defense. So now our Madras High Court has given ruling in case of Jayachandran Alois versus Superintendent of GST. Jayachandran Alois versus. So in this case, because of a fraud, a person has been arrested and for which a writ was filed before Honorable Madras High Court of India. Madras High Court tells that, has held that Section 69, what does it say? When we read Section 69, where the commissioner has reason to believe that a person has committed any offense. So the offences listed under Section 132 must have been committed by those persons. When will you know that he has committed or not? Only after adjudication. After adjudication, you will come to know that this person has committed and this is the quantum of tax evaded. Before finding all this amount, because we have seen what are all the offences in the arrest, imprisonment is based on the quantum of tax. If those amounts are not quantified, if the case is not adjudicated or assessed, then how can you come to a conclusion that the person has committed that offense? So, Madras High Court has held that the term commits clarifies that the act of committal of the offense is to be fixed first before punishment is imposed. When recovery is made subject to determination in an assessment, the revenue's argument that punishment for the offense alleged can be imposed even prior to such assessment is clearly incorrect and amounts to putting the cart before the horse. Meaning, adjudication must first happen and thereafter only arrest can happen. So this is what the judgment given by Madras High Court, against which department has filed a appeal before Honorable Supreme Court of India, where it is still pending. Same verdict was given in case of Sapna Jain's case. In the matter was referred to larger bench of Supreme Court. But these are the two cases only available in favor of assessment. There are other three cases. One prominent case is P.V. Ramana Reddy's case versus Union of India. Honorable High Court of Telangana has held that yes, we see the procedure is not followed, but the person, the petitioner has not at all. There has been sufficient evidence given by the department that he has not at all cooperated with the department. There has been a sufficient evidence that he has indulged in fraudulent activity, and hence arrest can very well happen. So that is what Telangana High Court has concluded. To say that a prosecution can be launched only after the completion of assessment goes contrary to Section 132. What Section 132 says, if these are the offences, go ahead and give an imprisonment of these many years. But Section 69 says committal. There is some difference between section 69 and 132. So, but then offences mentioned in section 132 have no correlation to and do not depend on any assessment and adjudication. No need for assessment and adjudication. Arrest can be made even before offences compoundable, is against which even petitioner filed an SLP before Supreme Court of India. Honorable Supreme Court of India dismissed the SLP filed by the petitioner. And the Telangana High Court further stated, in view of the above, Telangana High Court has accepted the fact that there is some deviation in the procedure laid down in section 41 and 41A of Criminal Procedure Code, but then we conclude, because of the grave nature of offence committed by the petitioner, that is fraudulent activity, bill trading activity, very much the department can go ahead and arrest it. So what the High Court, Honorable High Court has held that despite our finding that the protection under section 41 and 41A of CRPC may be available to persons said to have committed cognizable and non-bailable, despite our finding that there are incongruities within section 110, 169 and 132, we do not wish to grant relief to the petitioners against arrest in view of specific circumstances we have indicated above. So the divergent views are started coming in high courts. But when we analyze all these judgments, one clue we can take. Wherever department action is initiated, proper cooperation with the department will definitely guide as a defense for the assessee when the case goes for high court. So this is very, very important as far as arrest provision is concerned. So we will we will go back to the left out portion of penalties. Other penalty provisions. Section 122, subsection 3. We have seen already, a person who aids in, who helps in doing the offences, he will also be regarded as a convict. He may be levied a penalty of 25,000. And for section 123, failure to file information written is not yet operationalized, like our annual information statement of specified transaction in income tax. GST also section 150 is specified, but not yet notified. So if any persons who are required to file that return fails to file that, 100 rupees per day, subject to a maximum of 20,000 penalty. And section 124, fine for failure to furnish statistics under section 151, meaning even service tax regime, many of the members would have experienced this. One of our doctors, one of our doctor client has received a notice from the department that by analysis of your balance sheet, it appears that you have constructed a building for 1 crore. You please give the contractor details. So through receiver, the department wants to catch the suppliers. So if that kind of information is called for from any person, if that person fails to cooperate with the department, this clause would come 10,000 and 100 per day, subject to 10,000 will be levied, and for a continuing offence, rupees 100 per day, subject to a maximum of 25,000. And section 125, penalty for offences, general penalty. Any of the offences which are not covered so far, this is the general penalty clause of 25,000. So wherever the penalty amount we are saying here, it is for central tax, same amount will be there in state tax. So if I say 25,000 penalty, 25,000 plus 25,000, it is 50,000. And as far as section 126 is concerned, general disciplines related to penalty, meaning principle of natural justice is to be followed, opportunity of being heard must be given, and whenever the penalty provisions are invoked, whether it is minor breach or major breach, needs to be looked after by the officer. So there are certain parameters which are given under section 126 before levying a penalty. Officer must see. But one piteous thing in section 126 is the last clause says that section 126 will not be applicable for the cases wherever fixed sum or fixed percentage of penalty is specified in the article. I don't know why they have given that. Section 128, power to waive penalty by government. The government has got power to waive the penalty considering the situations of exceptional nature. So no such nature has been given by the government so far. Section 129, this is what in this section gets a weightage equivalent to section 122. That is wherever the goods are in transit, if it is not supported by e-way bill, then detention seizure can happen. Whenever the goods are seized and detained, release of goods will happen only after paying the amount specified herein. So if any goods are moving without e-waybill or tax invoice, so he has to pay 100% of tax and plus 100% of equivalent taxes penalty in case of taxable goods. If it is an exempted goods for which e-waybill provisions are applicable, like de-oiled cake, so 25,000 or 2% of the value of goods. And second limb of this provision says that wherever the owner does not come forward to claim the ownership of the goods, there can be some cases wherein the owner of the goods may not come forward and claim he is the owner, because when it is publicized, his name, his reputation may get affected, so he may not come forward. In that case, transporter will be levied a penalty. So in that case, penalty will be tax amount 50% of value of goods, not equal. Suppose 1 lakh is the value of goods, tax is 18,000, penalty will be 50,000. 1 lakh 50%, 50,000 in case of exempted goods, 5% of value of exempted goods, 20,000, whichever is lower is the penalty provision. And confiscation, I have already told. Ultimately, all these 4 points talk about suppression and unaccounted transactions. All other provisions we have discussed. I have taken 1 minute extra, 2 minutes extra. So the session is handed over to the chairperson. Thanks a lot for the fantastic opportunity given. A query session, as the chairperson has told, at the end of fantastic opportunity.
Yes, sir. Thank you, sir. Thank you for the excellent presentation. We have seen a lot of queries, sir. You can see in the chat session. We'll clarify it at the end of the session, sir. Thank you. Welcome, Bala, sir. Now we shall next session, value additions to clients through ITC. Yes, sir. Over to you, sir. We shall not waste the time. We can proceed the session. You can share the screen, sir. Yeah. Are you sharing the screen, sir?
I'm trying, madam, but couldn't. It is disabled.
No, you can see the share screen at the bottom of the screen.
The share is your entire screen now, madam.
Yes, please pick that, sir. And go for the share option. Yes.
The share is disabled, it seems.
What is
share
the
screen I'm doing?
Yes.
Your entire screen I'm selecting.
Yes, sir. Yes.
Okay.
Yes, sir.
You are able to view, madam?
Your screen is visible, sir. You can, yes, sir. Please go ahead, sir.
Thank you. Good evening, members. It gives me immense pleasure in addressing all the elite members of the Madurai branch of SARC of ICA in this wonderful evening. At the outset, I express my heartfelt thanks to MBSARC Chairperson, Secretary, and other office bearer for giving me this opportunity to address on the topic value additions through input tax credit. So the agenda would be, we will be going through the basics of input tax credit and the legislative intent behind each provisions, and also the conditions that are laid down in the law, embedded in the law, and the blocked, what are all the ITCs or the goods or services on which input tax credit is being blocked, that we will be going through for the next 1 hour, and what are all the value additions that we are going to get it from that. That also we will share then and there, right? So the input tax credit by itself is not a new concept. It was there in the erstwhile central excise legislation. Since 1970, there was a set of credit mechanism was there. During those days, the input tax, that set of credit was a concession given by the government. But when modified value added tax in the year 1986, it came, the government allowed input tax to be adjusted against the output tax. And that modified credit rule was expanded to capital goods from in the year 1994. And it was also expanded when service tax came. Initially, it was not allowed to cross-utilize excise duty and service tax and vice versa. But later on, in Sunback Credit Rule 2004, when it came from 10/9/2004, there was a paradigm shift that the government understood the concept of cascading effect. So they allowed cross-utilization in central indirect taxes between excise duty and service tax. Even the government tried at that point of time to bring GST in 2003 itself. But due to they want to move out to bring constitutional amendment, but was not possible. So any value-added tax, which was followed in many countries, the very objective of value-added tax is to capture the economic value addition at each channels of distribution. That was the prima facie objective. But instead, directly capturing the economic value added at each point of time, what the people did is, what the many countries did is, instead of following the direct method, they followed the indirect method. That is, they captured the economic value addition at each channels by introduction of input tax credit. Thereby, they removed, when you remove the cascading effects, then when you allow the input taxes to be adjusted against the output tax, then everyone will be paying only the tax on the value addition at each channel. So that is the main objective of bringing input tax credit. So when we come to the GST, the very basic constitutional amendment bill which brought GST into life, one of the primary objective of constitutional objective of that bill was to remove cascading effect of taxes in the system. That was a constitutional objective. So when we read the law in that background, input tax credit is a constitutional obligation for the government to see that the cascading effects are getting removed. So with that preamble, the law has been designed. So section 16 to section 21 of the CGST Act, which primarily deals with input tax credit, are containing this objective in mind. But here and there, some flaw is there. Not flaw, we can say some improvement is required, and the court of law is there. It will take it. So I want to reassure, unlike in earlier laws, in GST, input tax credit is no longer a concession, but a constitutional obligation. So it is constitutional obligation for the government to remove cascading effects. That is the reason why the input tax credit was brought in. So with that background, when we see what is the input tax credit, the tax that we have paid on three components, that is inputs, input services, and the capital goods. When you pay any type of tax on these three components, which will be utilized against your output tax. That is the background. But what is the prima facie condition given is, before knowing that conditions, we have to understand what is GST. GST is a tax on supply of goods or services or both, which are done by a person for a consideration in the course or furtherance of business. So any supply you do in the course or furtherance of business, this course or furtherance of business is also embedded in the definitions of the input tax credit, important definitions of the input tax credit, starting from capital goods, inputs, and input services. All these goods or services has to be used or intended to be used in the course or furtherance of business. Then only we will be eligible to avail input tax credit. So the levy itself, the supply will happen only when it is done in the course or furtherance of business. So the input tax credit will also be eligible only when it is done in the used or intended to be used in the course or furtherance of business. So with that understanding, you'll see that the important definition, some of the intricate issue points involved in the definition. Capital goods. When you see the definition between capital goods and inputs and input services, input and input services are restricted with supplier alone. So, whereas capital goods, the word supplier is missing in the capital goods. The person is there. So, what the lawmaker want to say is, when you are buying capital goods, then you can avail ITC and you need not wait that you have to be a supplier for availing an ITC. You may be a registered person for availing the ITC. You need not be a supplier. So what is capital goods? Capital goods means goods, the value of which is capitalized in the, it has to fulfill three conditions. It must be goods, and it has to be capitalized in the books of accounts, and it has to be used or intended to be used in the course or furtherance of business. What is capitalized? The lawmaker has given it to the industry to determine what all the goods has to be capitalized, because it is highly subjective in nature, and the lawmaker is having high reliance based on the past Honorable Supreme Court judicial pronouncement in various cases, wherein they told that in case of capitalization, you have to depend upon the accounting principles, guidelines, or accounting standards issued by the expert body, Institute of Chartered Accountant of India. So based on their recommendation, if you are capitalizing a particular goods in the books of accounts, then it will become capital goods. So it is leaving to the industry or to the registered person to determine in consultation with the chartered accountant. They have to do it. So, but it has to be used or intended to be used, but not to the immediate supply. I can give you an example in this regard. Is, for example, the pharmaceutical company, they have started a new research and development division, for which they have bought a new lab equipment for inventing a particular medicine for example, you can have corona itself. They have bought a machinery. Whether ITC they can avail is, due to the restriction available in the time limit, immediately you can avail ITC even after 2 years. Upgrades will invent a medicine for corona immediately. Just for example, I told, if you are inventing after 2 years, means for these 2 years, if you are not availing ITC now, then the ITC will be denied. So even if it is intended to be used, not to a remote supply which you are going to do on a further period, you can very well avail ITC. This is what capital goods are. Inputs, the goods which is used or intended to be used by a supplier. You need to be a supplier for the purpose of availing ITC on the inputs. And input services means service is anything other than goods, by saying that everything is included under the sun. So service which is used or intended to be used by the supplier in the course or furtherance of business, you can very well avail ITC, sir. Right. The restriction as far as inputs and capital goods are concerned, the GST law is good enough that the cascading effects are getting removed. As far as services are concerned, considering its intangible nature, the input service credits are blocked due to our federal nature of constitution. It is to be getting blocked. For example, I will tell you, I am an entrepreneur in Madurai, Tamil Nadu. I go for a business trip to Bangalore. I am staying in a hotel there in Bangalore, and that hotel is charging me with the bill along with GST due to the place of supply provision as per section 12 subsection 3 of the IGST Act. They will be levying me only CGST and Karnataka GST. If they are levying IGST, the credit will flow to me in Tamil Nadu. But by virtue of the nature of the service being a renting of immovable property, they will be levying CGST and Karnataka GST. So the credits are getting blocked there itself. This is one of the, this is again the substantive intention of the GST law is getting defeated. The reason, because due to the transfer mechanism not available between the states, the credits are getting blocked there. So it is, the lawmaker has to consider these things, and the court of law will also guide in the days to come that these credits should not be blocked. India being a single country, there must be a seamless tax credit flow. As far as service credits are concerned, like renting of immovable property related services, the service credits are getting blocked. So these things, the days to come, the lawmaker will design a mechanism to transfer these credits so that there will be a seamless tax credit flow. Right. We will first see section 16, and after that section 17 subsection 5. So section 16 is a basic section which provides the eligibility. It deals with eligibility and the conditions as far as which entitles a registered person to avail ITC. What is the prima facie condition as far as section 16 is concerned for a person to avail input tax credit is he should be a registered person. A person, registered person means a person registered under section 25 of the CGST Act. So for availing ITC, the precondition should be you should be a registered person. This itself is against the constitutional objective with which the GST law was brought. When you see section 9, which talks about, which is a charging section, which talks about levy and collection, it says that the GST has to be paid on intrastate supply of goods or services by a taxable person. So section 9 says that GST has to be paid by a taxable person. Who is a taxable person, sir? The taxable person is a person who is registered or liable to be registered under this act. So even and the government is having the authority or prerogative power by virtue of the law to collect taxes even is unregistered, because the levy attracts to taxable person. But when you come to the input tax credit, when a benefit is being extended to the assessee or the registered person, he has to be a registered person. Only when you are registered, you will be able to take credit. This was not the scenario in the earlier law, but this law has this hiccup because only the registered person is able to take credit. But even an unregistered person, the government is having the authority to collect tax from an unregistered person. Right. This was also held by Honorable Supreme Court in Formica India Division case, where they told that when duty was contested later and held to be payable on a later point of time, but the assessee was not paid earlier, the Honorable Supreme Court told that the corresponding credit should also be given to him in spite of the fact that he has not filed the return. So this has to be taken care of. These are all the highest form of litigation we are expecting in GST law in the days to come. Right. So the Formica India Division case, they told that when you are demanding taxes, then the beneficial consequences of the taxes should also be provided to the assessee. So the input tax credit should also be given to them. The same view in a different ratio was held by Honorable Gujarat High Court in Siddhartha Enterprises. They told that CENVAT credit under central excise law is a property of the assessee. So when you are denying credit to them, then by virtue of Article 300 capital A of the Constitution of India, you are depriving him to get his property. So input tax credit in GST is also equivalent to that. So when a condition is being attached in section 16, they are telling that only a registered person, that is a preliminary condition, you should be a registered person to avail ITC. The next one is subject to such conditions and restrictions as may be prescribed in the law. What are all the conditions? The conditions they have told in the post conditions, they have told in section 16(2). They have told, and also they have told in notification number 11/2017 CT rate dated 28th June 2017, which lays for the rate for the various type of services, which says that, for example, I am running a hotel, I am running a restaurant. Then if I am charging 5%, then I will be denied to take input tax credit. If I am an outdoor catering provider, if I am charging 5%, then I am denied. I have to fulfill a condition that I should not avail input tax credit. If I am a goods transport agency service provider, if I am charging 5% and otherwise my services are coming at a reverse charge mechanism, means then I am denied with the benefit of availing input tax credit. So these are all the conditions which are imposed on the registered person in various places in the law. And what are the restrictions, sir? So restriction is given in section 17 of the CGST Act, especially section 17 subsection 1 and 17 subsection 2 of the CGST Act. It says that when input tax credit is available, if it is used in the course or furtherance of business. If I am using any input tax credit for a non-business purpose, then I am denied with taking input tax credit. I am restricted to avail input tax credit as per 17(1). Sir, I am using for business purpose, but I deal with both the goods, taxable as well as exempted goods. Then if I am using any input or input services or capital goods exclusively for the purpose of supplying taxable goods, then I can 100% avail ITC. If I am exclusively using input or input services or capital goods for supply of exempted goods, then I am restricted from availing input tax credit. It is being provided in section 17. And if I am using common input or common input services or common capital goods for providing both taxable as well as exempted goods, then I will be denied. I will have to undergo a process by which common credits I am eligible to take only proportionate credit. The mechanism is being provided in Rule 42 and Rule 43. So that are all the restrictions that is available. And as far as zero rated supply, that is export of goods or services are concerned, they are treated at par with the taxable goods. So if though I am manufacturing an exempted goods, but if I am exporting means, then it becomes a taxable goods. I am eligible to take input tax credit on manufacture of such exempted goods if I am exporting. So these are all the restrictions that are given in the law here and there. So only based on such restrictions I am available. So I can tell you, sir, input tax credit under GST is no longer a concession, but it is a right, vested right, unless you fulfill a lot of conditions. So this is as far as section 16(1) is concerned. Now we will see what are the conditions that we have to fulfill to avail input tax credit. The first condition is I should possess certain documentary requirements. I should possess the documentary evidence for availing input tax credit. The first documentary evidence is a tax invoice as provided as tax invoice issued by my supplier as per section, fulfilling the requirement of section 31 of the CGST Act. All the requirement of section 31 has to be fulfilled. At least the minimum requirement is GSTN number of mine and my name, my address, and the GSTN number of his name and his address, detailed description of the goods being supplied, HSN code and value, tax amount, everything, and the place of supply. All these minimum particulars has to be there as per Rule 36. That we have to verify, because the tax invoice is a prima facie document, documentary evidence, which we have to maintain for a period which is mentioned in section 36 of the CGST Act. Next one is the self-generated invoice issued under section 31(3)(f). What is this self-generated invoice, sir? Sir, if I am paying GST under reverse charge mechanism in respect of the goods or services received from an unregistered person, then I can take ITC on payment of those taxes, but subject to a condition that I have to generate a self-generated invoice. I have to generate as per section 31(3)(f). So I have, in case of RCM ITC, I should have a self-generated invoice provided if I am receiving goods or services from an unregistered person. Right. Next one is debit note as provided in section 34, and bill of entry in case of import of goods. I'm importing goods which I have to pay IGST in the customs. So that will be mentioned in the bill of entry. Bill of entry I have to have, and the ISD, input service distributor invoice, as mentioned under Rule 54, sub Rule 1. All these documents I have to maintain, not now only, sir. At the time of availment also I should have, and I should preserve as per section 36 of the CGST Act for a period not less than 72 months. 72 months from the due date of filing the annual return for that relevant financial year. So for example, 17-18, the due date was 31st January 2020. So I have to maintain up to 2027 for 17-18 mandatorily, because the lawmaker, if he's coming and asking for a tax invoice, if tax invoice is not there, then we are liable by the penal consequences or for the adjudicating proceedings mentioned in section 73 or 74, and also the penal consequences there. So documentary evidence is the first point we have to keep in mind. The next point is we have to receive the goods or services by virtue of section 16(2)(b) of the CGST Act. Receipt of goods or services is mandatory, sir. You would have heard the session of Saravana Kumar, who would have insisted that receipt of goods or services is not being proved by the registered person. Then there is every possibility in spite of the genuinity in the receipt of the goods or services, there is every possibility that the department people will call it as a fake transaction in the present day scenario, because the ITC is being used as a business model. So we have to prove that we have received the goods or services. For proving, there must be a system embedded in our organization. You should maintain an inventory register, and you should have a goods received note, and a material receipt note should be there. And if you are under the law, I will tell you, sir, some of the adjudicating authority, we are also facing these cases recently, both in the central department as well as in state department, for the purpose of identifying the fake invoice. They are not only relying on our material receipt note or GRN or any entry in inventory register. They are asking for the third party proof. So third party proof means, I will tell you, if your supplier is supplying goods, and if the value of the goods, the consignment value of the goods is more than 1 lakh in case of intrastate, and if it is more than 50,000 in case of interstate, then they are liable to, they will be issuing e-way bill. Take a copy of the e-way bill and keep it in the invoice. That is very, very important. Next one is the copy of the lorry receipt. Is also very, very important, and also your CCTV footage. And if when the lorry is coming, the nearby, they would have paid the toll fees. You have that toll fees copies also. And if the nearby a weighman bridge is there, the lorry has put the weight on for they have identified their weight. So get that weighman slip and also keep. So all these documents, though it seems to be impossible act, but I will tell you, the lawmaker is having the authority, the department is having the authority to say that it is a fake transaction. So we have to have documentary evidence for receipt of goods. One exception is there. If we are in case of bill to ship to model, if the goods are being sent to my customer, then if my customer has received the goods, but bill has, my customer is in Bangalore, my supplier is in Chennai, he has sent the bill to Madurai, but he has sent the goods to my supplier, means, so even the receipt of goods by my supplier deemed to have been received by me, so that is also allowed. Similarly, if I have asked my supplier to supply directly to my job worker premises, so receipt of goods by job worker is also deemed to be receipt of my, I am eligible to avail ITC. And in case of the installment, if I am receiving goods on the basis of the installment, then I can very well, in case of receipt of installments, I am receiving some 10 installments, means the goods I am receiving in 10 lots, then I will be eligible to take ITC only on the receipt of the last lot. Then only I will be eligible. Sir, as far as goods are concerned, there is no issue, sir. You can, because they are tangible, you can prove. What about the service? So service, the receipt of service, you have to prove. Only when you receive the service, you are eligible to avail ITC. Have the mail copies, which demonstrates or which provides an evidence that you have received the services. These are all your internal documents. But when you see the in-depth analysis of the law, as far as the services are concerned, it is very difficult to prove. Right. So I will take an example of annual maintenance contract. Sir, in our textile mill, if you want, we are entering into an annual maintenance contract. The contract was entered on 1st March 2020, and it will cover up to February 2021. I have paid 1 lakh rupees as AMC services charges. The vendor has raised me the invoice. I have also made the payment. Whether can I avail ITC of 18,000 on that 1 lakh, or I have to proportionately, I have to divide it and I have to avail it? I will tell you, sir, it is our humble opinion that you can very well avail the entire 18,000 in March GSTR 3B. Nothing in law will restrict you, because what law service, there is a contractual obligation for my vendor that once he has received and raised an invoice and has received a payment, then he is there is a contractual obligation for him to do the services. So it is deemed that I have received the services, because by virtue of section 7 read with section 9, he has done a supply, and that supply is leviable. So very well we can avail ITC. So there is no need to proportionately avail 100% as far as services is concerned. Once invoice is issued and the payment is made, kindly avail the services. Right. The third point is, third condition, section 16(2)(c) says that The tax that was charged by the supplier should have been remitted to the government. The tax that was charged by the supplier should have been remitted to the government either through cash ledger or through credit ledger. Then only I will be allowed to take ITC. What could be the reason, sir? What could be the reason the government is saying? Because I cannot control my supplier, but the lawmaker want to do that. From the government stand, what they say is the seamless credit is a promise only when there is a flow to the government. The government, they should receive the money. The government should receive money for their exchequer. Then only it will be able for them to give credit. So simply because of getting an invoice, they cannot give. This is the government stand. As far as the trader's stand is concerned, you cannot make the recipient held responsible for the default of the supplier. In the earlier law itself, lot of judicial pronouncements are there. For example, in Honorable Punjab and Haryana High Court in Gerulal Balchand case, they told that unless if the authorities are able to prove that there is a fraud or collusion or connivance between this buyer and seller, and thereby they have evaded tax, means credit may not be available to the recipient. But if the government is not able to prove that there is a fraud or collusion between these people, then Honorable Punjab and Haryana High Court told that the credit should be given to the recipient, the customer or buyer. Right. Similarly, Honorable Supreme Court in Arise India Limited, they held that failure of the seller should not affect the buyer. I will tell you, sir, failure of the seller should not affect the buyer. And it is violative to Article 14 of the Constitution of India, because the right to equality is getting deprived here. So you cannot ask me, you cannot punish me for the fault of other person. So the right to equality is getting affected there. And another point is, you cannot ask the recipient to do an activity which is impossible to do. Right. I will come to that point later point, sir. The same ratio was also held in Mr. Vinayaga Enterprises, Honorable Madras High Court has held. Similarly, Honorable Supreme Court in Eicher Motors India Limited, Eicher Motor Limited, they told that tax credit is a vested right. It is not a concession or indefeasible. It is not the liberty of the government to restrict those rights unless there is a evidence for them to do that. So when you see all these cases, one thing we have to understand that conditions of taxes paid by the supplier cannot be foisted on the recipient. I will tell you, sir, the conditions of the payment of tax by the supplier cannot be foisted on the recipient. So this provision will have changes. We have to expect a lot of litigation in the days to come will be there. So this court, the judicial forum will decide. And when you read all these provisions, one thing they are telling that one common judicial pronouncement in the earlier law was there this condition was not there. Only in GST it was there. When they tried to impose it in the earlier law, they quoted Article 14. In that, they clearly told that if it is an impossible act for the recipient or a customer or a buyer to prove, then you cannot ask him to do that to avail ITC. If it is an impossible act, I will tell you what Section 62 says. Sir, the tax charged by the supplier should have been remitted to the government. Right? So what is the mechanism through which you can determine, sir, whatever the goods that you have bought from your supplier, he has to upload his invoice, a sale invoice in GSTR1, and it has to auto-populate and it has to reflect in your 2A. Then only you will be eligible to avail ITC. So this is how the lawmaker has told in the present scenario. But when you read literal interpretation of Section 16(2)(c), when you see that it says that tax paid by the tax charged by the supplier should have been remitted to the government either through cash ledger or credit ledger. So how the supplier will be remitting tax to the government, sir? We all know only by filing GSTR 3B, he will be paying the taxes either through cash ledger or credit ledger. How can I identify? How can I go and identify that whether my investors are included in his tax liability? It is impossible. So there is every possibility in the days to come that the government will struck down, the courts, honorable courts will struck down this provision. But the government, to protect their revenue, they introduced a section 43 capital A. But it is a parent statute. Excuse me. sorry, Section 43 capital A of CGST Act, which was introduced with effect from 1st February 2019, it said that the recipient will be eligible to take ITC only when it is reflected in his GSTR2A, and we will give a cushion that 20% of the total invoice disclosed you can take. For example, I will tell you, sir, if I have my March 2000, sorry, I will take January 2020. If my January 2020 ITC is 10 lakh rupees, but my the 2A, in my 2A, I have only 6 lakh rupees auto-populated. Only 6 lakh worth of invoices have been uploaded by my suppliers, which is reflecting in my 2A. I will be restricted with a credit of 6 lakh plus 20% on 6 lakh. That comes to 7,20,000. This was the intent of Section 43 capital A. But Section 43 capital A, even now it has not been notified due to the administrative delay. The law has to be passed in various state legislative. Due to administrative delay, it has not yet been notified. But the government cannot wait for their revenue, so they used the back door. They used Section 164, which provides for the power to make rules. They entered through 164 and introduced a new rule, 36 sub rule 4, by virtue of notification number 49/2019, with effect from 9th October 2019. It said that, sir, you can take ITC having 20% cushion. So only up to the invoices which was reflected in 2A you can avail, plus 20% you can avail. But that now it was only 10%. But after COVID-19, they have relaxed the requirement of Rule 36(4). They told that for the month of February, March, April, May, June, July, August, you need not see 2A. You need not comply with Rule 36 sub Rule 4. But all these you have to accumulate and you have to comply at the time of filing September 2020 return. So the lawmaker is not relaxing this not removing or keeping abeyance of this provision. They are only relaxing for the time being for the purpose of COVID-19. What are the impact of Rule 36(4)? I will tell you, sir, in this context also, Rule 36(4) itself is unconstitutional. It will come, the days to come, they will be telling, by using Rule 36(4), which came through Section 164, but the parent statute is 43 capital A, which was not yet notified. So it is a matter of dispute before honorable courts. This is one thing. And using Rule 36(4), the lawmaker has brought another rule. We can call it as a draconian rule itself, sir. Rule 86 class A, sorry, Rule 86 capital A, which was brought into effect by virtue of notification number 79/2019 with effect from 26th December 2019. They told that, notwithstanding anything contained, a commissioner or an officer authorized by the commissioner not below the rank of the assistant commissioner will be or he has a reasons to believe that the registered person has availed credit fraudulently or availed ineligible credit, that is the credit which they have availed without receipt of goods or services, or the credit they have availed for which it was not reflected in the 2A. For all these reasons, if the proper officer is having the reasons to believe, then by recording the reasons thereof, he can block the ITC. So this is what provided in the rule. But I will tell you, I will take the example of Honorable Supreme Court judgment in Ajanta Industries. So the reasons recorded, recording the reasons means not recording by yourself. By virtue of principle of natural justice, it should have been communicated to the another person who is going to challenge the decision, who is prejudicially affected by the decision what you are taking. So by virtue of principle of natural justice, you are supposed to intimate him. But I will tell you, sir, all the departmental officers, especially central department, left, right, center, they have blocked the ITCs. Still, some of the electronic credit ledgers are not being opened. So it is for us to immediately file a writ before the Honorable High Court to strike down this provision. We have to strike down this provision. Reason because it does not have the legal, it has subsumed the substantive intent of cascading, say the intent of GST with which it was brought, because it is to remove the cascading effect of taxes in the system. By bringing these type of draconian rules like 86 capital A, the entire trade is getting affected at this point. And I will also want to mention on this point, para number 18.3 of the 28th GST Council recommendation, which told that, sir, only when it is coming in 2A you can avail. But you take ITC based on the invoices, and based on your payment, you take ITC, we will not bar you. But in the days to come, if we will be approaching the supplier, if that supplier is not making any payment, or if the supplier is becoming a missing supplier, then there is no other risk will come to you. So that was the decision taken in the GST Council decision. But by bringing Rule 86A and all, even their GST Council itself is a constitutionally framed body as per Article 279 capital A. Then that is also a thing is there, sir. These are all litigative issues. What practically we have to do for fulfilling the requirements of our clients is, there must be a system embedded in their payment. Whenever they are making supplier payment, ask them to ensure, when they are clearing the creditor's bill, ask them to ensure whether the party has shown in GSTR1 and it is getting in your 2A, then ask them to make payment, because everyone will not come for litigation. Litigation is not our business. But the thing is, we have to ensure at least to this extent. Yes. So you have to pass the bill as such. So the next point, what I want to ensure here is, there are some companies, what they are doing is, even we have experienced that scenario. We will be raising the bill. They will make our bill payment, but they will not pay the GST, because we are a quarterly return filers. Only when it is getting auto-populated in 2A, they will be giving the GST. So to that extent, some of the assessees are cautious enough and they are following this 2A mechanism. So long story short, sir, what I want to ensure as far as third condition is concerned, lot of legislative issues are there. Keeping aside all those things, if you want to give good value addition to the clients, kindly tell them, ask them to get things in 2A, then ask them to pay the bill, clear the bill. At least they can pay the bill, but retain the GST portion. Then once it is getting auto-populated in 2A, they can giving it. Right. Now we will go to the second provision to section 16.2. It says that the payment, I am eligible to avail ITC only if there is a condition that if I am not paying, if I fail to pay within 180 days from the date of invoice, that I am supposed to reverse the input tax credit along with interest at the rate notified in section 50 subsection 1. That is what provided in the law, sir. So, but second proviso says that what is failure to pay? What is failure to pay is not being mentioned in section 16.2 proviso, as well as the rule 37, which is the machinery provision to enable this act. So that also does not demonstrate what is failure to pay. So I will tell you what is failure. If I am contractually, I am telling a customer, my supplier, that, sir, I will pay you only after 1 year. He is also agreeing. Then can I reverse my ITC? What is the need in it? Because this mechanism is missing. I am contractually agreeing that I will pay only after 8 months. So if the agreement itself says that my payment period, my credit period is 8 months, means then 8 months is there from the date of invoice. Mean, how can the lawmaker can ask me to reverse the ITC with interest if my supplier and myself have agreed that we will be settling the bill? I will be settling the bill only after 8 months. This point is missing in Rule 37 also. But better have a agreement for this. And I will also tell that if 6 months is happening, this is a practical idea. It is for the learned viewers to explore it. If 6 months is getting crossed in this type of example, have an agreement and also enter into a loaner-loanee relationship after 6 months to protect from ourselves from the departmental issues. Because loaner-loanee means your transaction, the nature of the transaction is getting changed after the end of the 6 months, wherein you will be you are live, you have got a loan as if you have got a loan. So for the balance 2 months, you can rescue yourself. This is one of the option I am giving you, sir. Next, in practically in the various trade industry and all, in case of works contract and all, in government works contract, they will not make full payment immediately. They will retain some 10%, sir. They will be retaining some 10%. They will be paying only after that. So all those things are also getting affected. So the rule 37 is not having the mechanism to prove what is failure to pay. And another thing I want to tell you is, but rule 37 is covering addressing other issues. For example, I am liable to pay 1 lakh rupees to my supplier, and the attributable ITC is 18,000 rupees. Out of this 1,18,000 rupees, I am paying only 59,000 rupees within 6 months. Means then I am eligible to reverse only 9,000. So that rule 37 is proportionately you can reverse based on your payment obligation fulfillment within 6 months. And next one is in case of Schedule 1 transaction where the consideration will not be there. It is deemed that you have paid the consideration, you need not reverse the ITC. And once you are reversing the ITC, if you are not making the payment within 180 days. But when you make payment after that, can you reclaim the credit? You can reclaim the credit. So it is a overriding proviso for section 16.4. You can very well, there is no time limit for reclaiming the credit. So whether interest you are liable to pay, it is our humble opinion that you have to pay interest. In spite of the fact that we have a amendment in section 50 subsection 1, a proviso has been added wherein it says that only to the extent of electronic cash ledger debited, you have to pay interest. Otherwise, if you are having as an ITC, you need not pay interest. Means we are differing from that. Specifically, Rule 37, Sub-Rule 2, it says that when you are not paying the ITC, sorry, when you are not making the payment within 180 days, then the attributable ITC on that payment, it has to be reversed and has to be added to the output tax liability. For that, you are liable to pay interest at the rate notified in 51. They have not provided in Rule 37 Sub-Rule 3 that they have told that at the rate notified in 50 subsection 1. So only at the rate, for rate only you have to go to 50. But as far as interest is concerned, what is interest is not defined in the GST law. But in explanation to section 49, they have told interest means other dues that you are liable to pay. So it is our humble opinion that interest you are liable to pay, sir. Now, what is the mode of payment that we have to discuss is, many departmental officers are telling that, so mode of payment means only you have to make payment through bank. Then only you will accept, either through bank or through you should have cash. You should have made payment. We will not accept the payment through book adjustment. We will not accept the payment through book adjustment that they have told. So I want to take the definition of consideration as provided in section 231. It says that payment consideration means which is both monetary as well as non-monetary. So even through a book adjustment, for example, sir, I am liable to pay to my supplier X 10 lakh rupees. Mr. X is telling that don't pay to me 10 lakh. Instead, you pay to Y. It deems to be been paid. So I am making payment to Y through a book adjustment. So in my books of accounts, Mr. X will be a creditor. I am debiting through Y. Instead of making bank payment or cash payment, I am paying to Y. I am making a book entry in the ledger of Mr. X in my books. That book adjustment also deems to be the payment made. It deems to be construed to be payment made. This was also upheld, or this ratio was also accepted by the West Bengal AR, Authority for Advanced Ruling in Messrs. Senco Gold and Diamonds Limited. They held that they have not restricted that payment should be made only in bank. GST law is silent on in what mode you have to make payment. So they have told that even a book adjustment also deems to have been paid. And similarly, Indian accounting standards also recognizes that one payment, one liability can be adjusted against the assessed liability. So both book adjustments are, Indian accounting standards are also recognizing the book adjustment as payment. And the S2L law, GST is a service tax law, wherein section 67, which deals with 67 of the Finance Act, which deals with the book gross amount charge, deals with valuation for the services. It also says that gross amount charged includes book adjustment also. So even the but left, right, center, the departmental, especially the state departmental officer, are issuing a notice saying that when you are making payment through book adjustment, we will not consider as a payment. So we will treat it as a, you have to reverse 100% ITC. They are issuing notice not to the tune of a minimum amount, sir. 10 crore, 20 crores, they are issuing notice left, right, center. So this judgment you can use it, sir. Right. So section 16.3 we all will be knowing. Depreciation, when we are availing depreciation on capital goods, then to that portion of ITC you should not capitalize and you should not avail the depreciation. Dual benefit is not allowed. What is the effect of additional depreciation you will be claiming as per section 32 of Income Tax Act in case of a plant and machinery used in the manufacture is what is depreciation? The same will also applicable to additional depreciation. This is our humble view, sir. Now, coming to the time limit for availing ITC as per section 16 subsection 4 of the CGST Act. The time limit mentioned in section 16 subsection 4 of the CGST Act is, they told that, for example, for the invoices which I have received in the financial year 2019-20, ITC on which the time limit for availing ITC on those invoices is due date of filing the September 2020 return or the date of filing the 1920 annual return of 1920, whichever is earlier. This time limit is being mentioned in the law. Whether it is a limitation, the time limit in earlier service tax or Sanmat credit rules are is not there, but this law is mentioning the time limit. Whether it is a limitation or a prescription, it is more of a limitation. But as far as only for the invoices or debit notes pertaining to your receipt of goods or services, you are restricted with the time limit. As far as bill of entry, if you are left out to avail ITC, there is no restriction as far as bill of entry is concerned, sir. So here, one question is arising as far as if I am liable to pay GST under reverse charge mechanism for the goods or services received in the financial year 18-19, I am not paid. So whether can I now in the month of March 2020, can I pay now and avail ITC? Section 16.4 has told that invoices pertaining to 18-19, you cannot avail ITC now because the time limit has expired on due date of filing September 19 return, which was expired. Now, can you avail? Can you avail? So this is one for understanding this question. We have to read section 31.3F, which provides when a registered person has to generate a self-generated invoices in respect of the goods or services received from an unregistered person on which he is liable to pay GST under reverse charge mechanism as per section 9 subsection 3 or 9 subsection 4. So the time limit given in section 31.3F is the date of receipt of goods or services, sir. So when you would have received the goods or services from your unregistered dealer, sir, for example, I will give you a practical example, sir. If I'm importing a services, if I'm importing a service, I'm paying importing a software from London, UK, then I have not paid GST under reverse charge mechanism. Can I pay now and take ITC? Yes. The lawmaker is telling that as far as that foreign supplier is concerned, he is an unregistered person and you are liable to pay GST under section 5 subsection 3 of the IGST Act. You are supposed to generate an invoice. You are supposed to generate an invoice. So that invoice, can you do that? What law is telling that by virtue of section 31.3F, the date of receipt of goods or services shall be the time limit which is given. Can I generate an invoice today and I pay ITC under reverse charge mechanism? Can I avail that now? It is a subject matter of litigation. If it depends upon the risk appetite of the client. So there is a specific requirement in 31.3F, the time limit. They have told that when you have to generate a self-generated invoices, the date on receipt of goods or services, naturally it will be in the financial year 18-19. So you should have raised the invoice on that date. But you can have another defense is that, sir, I am paying ITC a reverse charge liability, discharging reverse charge liability on those invoices only now by paying applicable interest. Can I stretch the date of issuing self-generated invoice, which I'm going to issue and keep it myself? Can I do that? It is a subject matter of litigation before the courts. The courts has to decide, sir. Right. Other thing, as far as time limit is there, our suggestion would be in case of gray areas, whether you can avail ITC or not. For example, I will tell you, sir, the Honorable Orissa High Court, they gave a landmark judgment in Safari Retreats Private Limited case, wherein they told that generally by virtue of section 17.5 Class C and 17.5 Class D of the CGST Act, there is a bar in taking ITC on the material goods or services used in the construction of immovable property. It is allowable only for the purpose person who are in the same line of business. For others, it is a blocked ITC. In this Orissa Safari Retreats Private Limited case, the petitioner was a person who has constructed mall, and he has constructed mall, and he is going to use that shops, or he will let out on hire for commercial purpose on a rental basis. He will collect rent along with the GST and he will pay to the government. So what he is asking is, why, if case I am constructing building and selling means I am paying GST on my outward supply, you are allowing me to take. Here also I am going to use that building for the purpose of hiring out for commercial purpose. I am going to collect GST and I am going to remit. Why you are restricting me? So by virtue of Article 14, it is depriving the right of equality. By virtue of Article 19, Class 1, subclass G of Constitution of India, it is depriving my right to do business or profession. These things are depriving means. So Honorable High Court, Orissa High Court, they told that it is allowable. They have struck down the provisions of section 17.5. Now the case is pending before Honorable Supreme Court to decide. So if any of our clients happens to be the person who is constructing shopping malls, all those things, what would be our suggestion is avail ITC, because time limit, once lapsed means you cannot avail ITC. Avail ITC, don't utilize. You just inform to your proper officer so that later on they cannot demand and recover by virtue of section 74 saying that you have fraudulently or misstated the facts or suppressed the facts. Intimate to the proper officer, avail ITC, don't utilize. Once the Supreme Court judgment is coming, do accordingly. Excuse me, Chairperson, madam. How long I can go, madam?
So you can please go ahead, sir.
Okay, madam. Okay, madam. Thank you, madam. Thank you.
So how long you need, sir? How long you need for to complete it?
Maximum of 20 to 25 minutes, madam. Is it possible?
Yes, sir.
Madam?
You can go ahead.
You can tell.
Yes, sir. Please go ahead.
Okay. Thank you.
You can go ahead, sir.
Thank you. Sorry for the inconvenience. Thank you. So now we are going to see the blocked ITC. First blocked ITC is there are certain goods or services. Again, these blocked ITCs are against the substantive intent with which the Constitution has brought GST. It is against the constitutional objectives. So we cannot use logic because it starts with a non-obstante class, notwithstanding anything contained in section 16 subsection 1 or subsection 18 subsection 1. So in spite of the fact that though these goods or services may be used in the course or furtherance of business, you are barred from taking ITC. You cannot apply your logic. Logically, you may be. Ethics of GST may allow you, but law of GST will not allow you. The first restriction is ITC on motor vehicle used for transportation of passengers. If the seating capacity is 13 or less than 13, you are barred from taking input tax credit. This came into effect with effect from 1st February 2019. So in case of motor vehicles, if the seating capacity is 13 or less than 13, you cannot avail ITC. Any exception is there, sir. Exceptions are there. If those input tax credit, if those vehicles are used for further supply of goods or services, for example, I am a car dealer, I am buying and selling car, I can avail ITC. Right. I am a rent-a-cab operator. I am buying. I have bought this car for the. I am hiring out for the purpose of transportation of passengers. I can avail ITC. I am a driving school operator. I am buying my car and I am using that car for the purpose of imparting driving skill to the customers. I can avail ITC. So these persons are only ITC, but all other persons, if the seating capacity of that motor vehicle is less than 13 or less than 13, they are barred from taking ITC. That vehicle is predominantly used for transportation of passengers. This is one restriction. If the motor vehicle is the seating capacity is 13 or more than 13, can I avail ITC? Very well avail. You can avail ITC. For example, buses, tempo travelers, or Tata 407 vehicles. All these things, you can very well avail ITC. Even some textile company or a tire manufacturing company, if they are have bought buses for the purpose of transporting their employees from the residence to the office, very well they can avail ITC. Nothing in the law will restrict. Nothing in the law will restrict. That is with effect from 1st February 2019. Similarly, if I am using a vehicle, if a motor vehicle is for the purpose of used for the purpose of transportation of goods, can I avail ITC? Very well, you can avail ITC. Nothing in the law will restrict that. But some people are asking, sir, I am having a Maruti Omni van, or I am using that predominantly for the purpose of transportation of goods, for the purpose of transportation of goods. So can I avail ITC? I will tell you, sir, you can use even Audi car for the purpose of transportation of goods. That is not the criteria here. The criteria here is the registration certificate in RC book. If it is classified as a goods transport vehicle, you can avail. If it is a passenger transport vehicle, you cannot avail. So we will see, sir, all motor vehicle, if it is predominantly used for transportation of passengers and its seating capacity is 13 or less than 13, you cannot avail ITC. Not only the ITC pertaining to that motor vehicle, even the ITC and the services used for those motor vehicles, you cannot avail. For example, general insurance or servicing services, AMC services for that vehicle on which you have paid GST, you cannot avail. Insurance premium of those vehicles having seating capacity 13 or less than 13, you cannot avail. And you are buying some spare parts for those vehicles, you cannot avail. But if the seating capacity is more than 13, even you can avail the ITC of the GST paid on those those motor vehicles, and also these allied services like general insurance, servicing, and repair and maintenance. Now you see some practical examples as far as things are concerned. Motorcycle, some people are asking, can you avail ITC for a two-wheeler, sir? Two-wheeler, 100% you cannot avail, sir, because what is motorcycle is, we have to go and see the definition of motor vehicle. In GST law, what is motor vehicle? They have asked us to go and refer to subsection 28 of Motor Vehicle Act 1988. What is motor vehicle? As per Motor Vehicle Act is any vehicle which is mechanically propelled device adapted for the purpose of usage on roads, but does not include fixed rails or special purpose vehicles which are used within the factory or a closed premises like a godown or warehouse, and vehicles which are having less than four-wheelers but their engine capacity should not exceed 25 cc. So what is simple is, sir, any two-wheeler what we are using now, generally in the trade parlance, will be having more than 25 cc's. So more than 25 cc's means naturally they are not in the exclusion of motor vehicle as defined in Motor Vehicle Act. So naturally they will become a motor vehicle as per Motor Vehicle Act, and they will also become a motor vehicle as per GTA, as per GST. So we are denied in availing ITC on those motorcycles. And can we avail ITC on dumper, tipper, or crane vehicle? Very well, we can avail. These are all transportation of goods vehicle you can avail. Forklifts, road roller, which are used within the factory or warehouse godown, very well you can avail. They are not at all a motor vehicle. You can call it as a plant and machineries, and you can very well avail. And can you avail ITC on demo vehicles? In many car manufacturer, car dealers will be having vehicles for demo purpose. Can you avail ITC on it? Authority for Advanced Ruling in Maharashtra in Chaubale Industries Private Limited, they beautifully held that these vehicles, if they are being used for further supply, Sir, this is only a showcase piece. For the time being, I will be using this vehicle for demo purpose. After that, I'm going to sell. Means very well you can avail ITC on those vehicles. But one thing we have to keep in mind is that the demo vehicle should not be capitalized in that car manufacturer books. It should be in the inventory. Very well you can avail ITC. So due to the paucity of the time, I will complete the immovable property related blocked ITC, and then I will come back to this goods, food and beverages and also. Sir, as far as input tax credit on immovable property is concerned, in case of works contract services, if the works contract services are exclusively for the purpose, sir, I will start with an example itself. What the lawmaker is saying is, ITC on works contract service, if used for the construction of an immovable property, is barred. Who can take ITC on the works contract services? For a works contract service supplier, for him, outward supply will also be works contract service, inward supply will also be works contract service. He can avail ITC. Similarly, the goods or services used in the construction of an immovable property, you are barred from availing ITC. Who can avail ITC is, I am a builder. My primary business is constructing, building and selling, means I can avail ITC. This is what provided. So for example, I'm a textile textile company. I'm going to construct a factory building at the cost of 5 crore rupees. I would have bought cement, steel, bricks, and I would have engaged an engineer for the construction. Whatever the GST accrued on those things, I cannot avail, because my outward supply is sale of yarn. I cannot do it. But if I have given it to an works contract service provider, he is charging me 2,500 rupees per square feet, means then 20,000 square feet, he is going to charge 5 crore, means if he has subcontracted to another works contract service provider, that guy is charging 4 crore with 18%, 4 crore 72 lakhs to my works contract service provider, then my works contract service provider, who is a principal works contract service provider, he can very well avail ITC, because as far as he is concerned, outward supply, the supply which he is doing to me in the form of construction of building, is a works contract service, and the inward supply which he has outsourced and he got it, that is also an inward supply. Very well he can avail ITC, no restriction in the law. So which we have already dealt with Honorable High Court judgment, Orissa High Court judgment. But in the similar case, in the similar issue of authority for advance ruling in Tamil Nadu, in the case of Sri Varalakshmi Mahal, they told that we cannot rely on the decision of the Orissa High Court judgment, because the Orissa High Court judgment is ultra vires of section 17 subsection 5 class D of the Act, and we, being an authority for advance ruling, cannot go beyond the scope and jurisdiction given to us. We cannot question the law. So whatever available in the law, we will say. So construction of Kalyan Mandap, whatever the ITC accrued on it, we cannot allow you to avail ITC. So Orissa High Court judgment, we cannot rely on it, because we are restricted in applying the ratio applied in Orissa High Court judgment. That is what provided, right? So in GST law, they told that construction of an immovable property. What is an immovable property? Whether immovable property is defined. Immovable property is not defined in the GST law. We have to take the definition from section 3 of the Transfer of Property Act, which says that anything land and building, as well as anything which is attached in earth or embedded in earth or rooted in earth, will be called as immovable property, right? For applying whether the things which arose on account of a works contract service or a construction service, whether it will be an immovable property, the food for thought is we have to analyze the following principle. The first principle is, sir, the equipment, land and building, no doubt, sir. Other items, what are all the items they have given? They are told that the plant and machinery means, in explanation to 17 itself, they have defined what is plant and machinery. Plant and machinery means apparatus, equipment and machinery fixed to earth or structural support that are used for making outward supply. Includes foundation and structural support, but excludes land, building, or other civil structures, or telecommunication towers, or pipelines laid outside the factory premises. So two conditions that has to be fulfilled as far as when you are dealing with the equipment or plant and machinery in course of or in connection with immovable property, because they told that the plant and machinery for the purpose of input tax credit should fulfill two conditions. One is it should have been fixed to an earth for a structural support or a foundation support, and it should be used for making outward supply of goods. So whether the equipment remains an equipment or a plant and machinery remains a plant and machinery or partakes the characteristics of immovable property, to determine certain principles are laid down in the law. That principles have been arrived out based on various judicial pronouncements over a period of time. The first thing is, sir, for determining whether an equipment is attached to the earth is a immovable property or not, how to determine is, if the equipment is attached to a land or building, after attachment, the beneficial, it is being attached for the purpose of the beneficial enjoyment of the land or building, means then it will be treated as immovable property. I will again repeat, sir. If the equipment attached is for the beneficial enjoyment of the land or building, then it becomes an immovable property. That equipment also becomes an immovable property. But if that attachment of the equipment is for the beneficial enjoyment of the equipment, then that equipment becomes a movable property. So that was also held in the Honorable Supreme Court in solid and correct engineering works. Next point, what you have to do is, in Honorable Supreme Court in Triveni Engineering Company, they told to determine what is movable or immovable is, when you are moving a property from one location, goods from one location to another location, you are going to make a substantial damages for the goods as such, then property as such, then it will be treated as a immovable property. If you are able to shift as such without making any substantial damages, then it will be movable property. This is second principle, sir. The third principle is the accounting treatment. How you are booking in your books of accounts. For example, you are constructing a building, means the plumbing material that you are buying, if it is being capitalized with the building, all those plumbing materials you cannot avail ITC. After that, the fourth principle is the HSN code, what the supplier is charging you is very, very important, sir. If they are charging in case of works contract service, if they are charging 9954 means then you are restricted to avail ITC, because it is a works contract service. Even a positive judgment, authority for advance ruling in Maharashtra, in the case of Nipro Corporation India Private Limited, they told they have stretched to a length in a combined works contract. A single bill was raised, sir, for the works contract. In that case, the authority for advance ruling stretched it further and identified what are all the equipment which can be identified separately, that they have identified, they have allowed ITC. But what is important is, in case of we will see the practical examples, sir. With this understanding, we will see, sir, ITC on plumbing materials can be avail an ITC. Avail ITC on those plumbing materials. I will tell you, at the time of getting building plan approval from the corporation, it may be for a residential building or it may be for a factory building or a commercial, whatever it may be, when you are getting the approval, the plan approval, for calling a building as a building, certain basic infrastructure should be there. So plumbing is one such basic infrastructure, sir. So without plumbing materials, it will not have the fulfillment of a building as such. So don't avail ITC on those plumbing material. It has to be capitalized with immovable property. Electrical insulation. Basic electrical insulation should be there. If it is required, then take ITC, sir. Otherwise, if it is being embedded in the building itself, the basic electrical installations are required, the pipes laid within the building, don't take ITC. Don't stretch together and take ITC. Better capitalize with the building itself. But you can take ITC on the light bulb or fridge, fan, everything on that you can take ITC, because you can easily move that without making any damages. As far as air conditions are concerned, split AC, no issue, you can avail. As far as centralized air condition are concerned, it becomes a works contract. Works contract, if it is becoming a works contract, can you call it as a plant and machinery as defined, sir? What is plant and machinery, sir? In centralized air condition, the air condition machine will be kept in one location, and for flowing the air, some aluminum duct will be installed in the building itself. So it is a civil structure. So can you avail ITC on that aluminum duct? To our opinion, better don't take that, sir. Better don't take that. The reason, because when you read any apparatus or equipment or machinery which is fixed to earth, and the next point what they are telling is it is should be used for outward supply of goods. I will tell you, sir, it is not used in the course or furtherance of business. It should be for outward supply of goods. For example, in a textile showroom, any aluminum duct are being installed means for the purpose of centralized AC. For AC equipment, you can very well avail ITC. Better get a separate full bill from the your supplier. For the construction work in association with this centralized air condition, better don't take. Better don't take, sir. Next one is interior decoration. Interior decoration, some interior decoration, partitions, aluminum partitions, glass partition, we are able to shift it without making any substantial damages, avail it. Or otherwise, which is attached to the building itself. And if you both false ceiling and interior decoration, if you want to move it, you have to damage it. Then only you have to move it, means you cannot avail. Lift. As far as the lift is concerned, our humble opinion, going back to the analogy what we have adopted for centralized AIC, you can adopt it for a lift also. As far as the lift is concerned, office building, kindly don't take it, sir. Factory building can take it. So, however, in the case of the Authority for Advanced Rural Maharashtra, in Las Palmas Cooperative Housing Society Limited, they held that replacement of a lift and the ITC on that lift, they have denied ITC. You cannot avail it. But it is our risk proposition. We have to analyze the risk appetite of client. You have to tell that department will dispute as far as lifts are concerned. Lifts are concerned, going by the definition of the plant and machinery, if the lifts are used in the factory and it is directly used for the purpose of outward supply, very well you can take it. But in case of a textile showroom or in an administrative office, a lift is there, you have to stretch farther to prove to the department that it is used in the outward supply of business. Here they have not mentioned that it is used in the course or furtherance of business. Instead, they have mentioned that any plant and machinery attached to earth should be used for making outward supply of business. They have not told that furtherance of business. So our humble suggestion would be, in case of factory building lift, you can avail it. As far as office building lift, better not to dispute with the department. We can capitalize and use it. As far as repairs and maintenance are concerned, explanation to 17.5C and D is clearly told. What is construction? Construction includes, sir, construction of immovable property per se will be capital expenditure. You cannot avail ITC. As far as explanation in 17.5C/D, they have told that construction includes any renovation, repairs, or those things. You can avail ITC to the extent. If you are capitalizing, you cannot avail. If you are charging to P&L, very well, you can avail, sir. As far as personal consumption, you cannot avail. What is personal is a subjective matter. We have to decide. Generally, in companies, usage by employees may not be called as a personal, though the department may dispute, but it is to the subjective issue. We have to decide as such. As far as the blocked ITC in case of goods lost, stolen, destroyed, or disposed by way of gift or free samples is concerned. With that, I will close today's session, sir. This is the last point. Blocked IT goods lost. As far as section 17.5H is concerned, we have to see these points, very, very important points, sir. They have mentioned only goods. What are all those goods? Goods includes naturally raw material or raw material found in semi-finished goods, raw material found in finished goods. So raw material, semi-finished goods, work in progress, and finished goods may be called as goods. So if the goods lost, if a finished goods is lost or destroyed by fire, whether I have to reverse the ITC. I'm asking a question, sir. If the finished goods, which is destroyed by fire, on account of fire, whether I am liable to reverse ITC, our opinion would be not required, because what section 16.1 says, any goods used in the course or furtherance of business. What is business? Which is a very, very expanded definition given in section 2, subsection 17 of the CGST Act, which says even trade, commerce, manufacture and profession are also business. What is manufacture, sir? Sir, when a goods is being used in the course or furtherance of business means when I am using the goods in manufacture, then automatically I have used. I am eligible to avail ITC. Why I have to reverse it? So the question here is, as far as finished goods are concerned, the goods, when the raw material is transformed to finished goods means only when a manufacturing process has to be done. After manufacture only, it will transform to finished goods. So automatically the goods which are used in the process of manufacture deemed to have been used in the course or furtherance of business. So if the finished goods are lost or destroyed, then ITC need not be reversed. Again, it is subject to litigation. Depending upon the risk appetite of the client, you can take a call. That is very, very important. As far as the raw material is lost, better reverse it. So the word lost is there. Goods lost here means the loss happening in the process of production or manufacturing, you need not reverse. Even it may be a normal loss or an abnormal loss, you need not reverse. But it is only it has to be lost. If it is used in the manufacture, very well you can avail. Very well you can avail ITC. Exception is in case of section 19, subsection 3. If you are given to a job worker, if any goods are lost in the hands of the job worker, you are liable to reverse the ITC. Goods written off. What is the goods written off, sir? You will be creating provision for these slow-moving, non-moving items in the books of accounts, sir. In P&L and balance sheet, you will be creating provision. Whether we have to reverse ITC. In our humble opinion, for creating a provision, you need not reverse ITC. Only when it is written off, it became an obsolete, it is no more usable, then it has lost its merchantability, then only you have to reverse it, sir. Now, coming to a very important point, goods disposed of or by way of gift or free samples. What is disposed of? It is get rid of. Get rid of. So, which will you be get rid of? You will be disposing of, sir. Yes, goods which are having the merchantability, not necessarily. You will be disposing of only the goods which are having no merchantability. This is one school of thought. Next one is, you are giving us a gift. What is a gift, sir? Gift is a gratuitous act or a unilateral act which does not expect anything in return. It should be a unilateral act. Then only they will be allowing to take. But as far as here, they are telling that if you are giving anything free, then the chain will not follow. So we will give you two opinion as far as this is concerned. Disposed of by way of gift or free samples are concerned, we will give two opinion. One is risk prone, another one is conservative opinion. One is, sir, any goods that you have given as a free or as a gift, our humble opinion, humble suggestions would be, a conservative opinion would be, reverse the input tax credit. Reverse the input tax credit as per 17(5)(h). For example, I will tell you, I'm a pharmaceutical company. My turnover is 300 crores. I'm incurring cost on account of free samples is 2 crores. So whether I have to avail ITC, though this 2 crore may be included in my cost of production, and I will be charging my future suppliers, but there will not be supply recipient relationship at the time of giving free sample. So our humble opinion would be, if it is 2 crore and it is 5% means 10 lakh rupees will be the ITC amount that we have to supposed to reverse. Better reverse the ITC. Don't take ITC on all free gifts like Diwali sweets, New Year gifts, all those things. But all these gift or free sample, reverse the ITC. That will be the safer position. But you can ask me one question, sir, can we follow entry number 1 of schedule 1, wherein it says permanent transfer or disposal of business assets on which ITC is availed? We will avail ITC and then we will pay the tax on that outward supply means. I will tell you, in case of that, you have to pay plus 10% as per rule 30. So better is for a tax cost benefit is or a cash flow benefit is, reverse the ITC when you are giving anything as a gift or a free sample. This is a conservative opinion. Another opinion, following the Honorable Supreme Court judgment in the Excise in Fiat India case, if you want to prove that the cost of the free samples and gifts are added in our output supply, so automatically you are going to collect tax on that output supply and you are going to pay. This will be settled at the highest judiciary level, depending upon the risk appetite of the client. You can decide accordingly, sir. So with that, I close my session. Chairperson, madam, thanks for the wonderful opportunity given. I thank all the viewers who have learned viewers who are viewing this program. Thank you, sir.
Thank you, sir. Thank you for the nice presentation. Now we shall invite Saravana Kumar sir also on the screen.
Okay. Okay.
Welcome back, sir.
Thank you, ma'am.
Shall we move on to the queries part?
Yeah, please go ahead.
Yes. So the questions will be displayed in the screen so that, sir, can you please mute your, I think it is getting echoed, sir. Saravana Kumar, sir. It is getting echoed.
Which one, ma'am?
Any other devices open?
Mine. No, nothing else.
Okay.
Nothing is there. Only my mobile is there.
Okay, sir. Okay. Now it is perfect. So questions will be displayed in the screen.
Okay.
Is it possible for you to view it, sir?
Yes, madam.
Yeah.
Yes, madam.
Yes, sir. Please go ahead, sir.
Sarma, you proceed with your
Okay. A dealer did export business, all purchases, made local purchases, and paid GST. Refund of GST, is it available? In case due to COVID, debtors turned into bad debts. Sorry?
So each question we will answer. Hello.
What's that doubt, sir?
No.
No, the question is displayed on the screen. Chairperson has displayed the selected questions on the screen, for which we need to reply.
Oh, this. Sorry.
Yes, sir.
Okay.
It is visible on the screen.
Yeah. First part, can I answer?
A dealer. Okay. Go ahead.
As far as the first part is concerned, a dealer did export business. All purchases made local purchase and paid GST. Refund of GST, is it available? Sir, this
Finish
during
the entire question.
Okay, debtors turned into bad debts. Okay. As far as this is concerned, rule 96B you tell, Saravana. 96B alone you tell. I will complete the first portion. Okay. As far as this export business is concerned, I will tell, as far as which I have told in my session itself, even the zero rated supply by virtue of section 16 subsection 2 of the IGST Act, even when you are selling the exempted exporting the exempted commodities, that also deemed to be a taxable supply, and very well you can avail ITC and you can claim it as a refund. So this is what our stance, sir. This debtors turned into bad. Sarana, you can tell that 96.
Yeah. See, as far as export debtors are concerned, the law has been amended from 3rd of April 2020. There is a new rule has been inserted in CGST rules 2017, saying that rule 96B, it says that how refunds are processed for services, same logic is incorporated for goods also. Hitherto, if debtors export foreign currency, debtors money is not realized, no harm. But from April 2020, new rule has come, which says that within time limit prescribed in FEMA, 12 months is the time period prescribed in FEMA. If you are not able to realize your debtors, the money which you have received as refund, either in both form, either as an LUT refund or as a payment with the payment of tax, the same needs to be paid back to the government along with interest. In case after some time in future, if you are able to realize the money which you originally treated it as debtors, you can get it back as a refund. The relevant date is extended by that extent, but interest will not be given by the government. Your question, answer to your question is, in case the export debts become bad, that refund received on such export debts need to be paid back to the government. So the time limit given for realization of export proceeds is time limit prescribed under FEMA, which is presently 12 months unless otherwise extended by RBI. In case you get a permission from RBI for write-off your bad debts, this rule will not be applicable for you.
Thank you, sir. We'll move on to the next
I think
question.
we can move on to the next question.
So next question, you can go.
Sir,
ahead.
right, you can go ahead. Bala, sir.
The penalty is
Sorry,
concerned.
penalty. I'll answer. Yeah, I'll answer. If wrong ITC availed in 1 month is reversed in subsequent month, whether penalty is leviable. Penalty is not leviable if you yourself have reversed, ma'am, because section 73 and also we ourselves have proved that it will not be, we ourselves have reversed that it will not be taken as a fraud case. So section 73 would be applicable. In section 73 itself has got a provision that you make good before the officer finds, there will not be any penalty clause. So penalty will not be levied. We ourselves have rectified the mistake. So in case you have reversed it, no problem.
Okay. Sir, I want to clarify it. The first 5 to 6 questions belongs to the penalties, I think so. Because when you are speaking, it has been dropped out. I think you can go ahead with the question. Yes. So no need confusion. Yeah. Next question, sir.
I'll answer from the, you will display? Yeah, okay, fine.
Yes, sir, display.
For the year ended, 31/3/2018 in GSTR 9 and 9C, the ineligible ITC blocked credit was reported. However, the same was not reduced in electronic credit ledger. Please advise any impact. Fine. This is despite not connected to penalty provisions. So let me answer this question. So the moment you have qualified in your 9C report, the same and you yourself have disclosed to the government, even if that was not reduced from your electronic credit ledger by that time, I mean, even now you can pay it through DRC 03. Through DRC 03, pay the ineligible ITC along with the interest. So the interest rate of interest is 18% and not 34%. So interest calculated at the rate of 18%, you can pay through DRC 03. Right.
Okay. Thank you, sir. So next question is split into 2 parts. Audit fees with GST made to client. In subsequent month, GST paid and written GSTR 3B. But the client says that fees includes GST also. So this GST paid by me can be adjusted in subsequent months. That is the question, sir.
Okay. Yes. So please correct me. I mean, sorry, it cannot be corrected. But then please check whether I have understood your question properly. I have raised a bill to a client charging 10,000 rupees fees and 18% GST, 11,800 I have charged. But the client has given me 10,000. Sir, I'll settle my entire sum as 10,000. GST is included in 10,000 itself. He himself has taken a discount, let us assume. So in this case, actually 1,800 needs to be paid, going by the wordings of the law. But there is a structuring. We may structure this transaction in a way according to the provisions of section 34 credit note. For deficiency in provision of service, the client has reduced the fee. So we are raising a credit note to the extent amount is reduced by the client, and you are giving a credit note for the extent GST is not being paid by the client. And alternative number 2, this is option number 1. And if this transaction has happened in the same month for which you have not filed a GST return, you yourself can revise the invoice. You can cancel the original invoice or alter the amount and you can give it to the client. 2 options are available. Hope I have understood your question. I have answered your question.
Thank you, sir. So next question by Kumar.
Whether penalty under section 73 and 74 is independent of penalty under section 122. Example, can an officer issue notice under section 73 or 74 for penalty without specifying section? Fantastic. See, according to my opinion, and see, section 122 is the penalty section. In spite of the fact that your section 73 and 74 talks about penalty, the penalty quantification is exactly as per section 122 subsection 2. So when we read section 122 and 73-74, it gives us a clear picture that section 73 and 74 is a machinery provision section. See, the power of levying penalty, the power of implementing penalty or under section 122 is done through section 73-74. So section 7374 is a machinery provision, in spite of the fact that section 7374 does not use or derive section 122 in section 7374 itself. So there cannot be two penalty for the same offense. So in my opinion, section 122 and 7374 are not independent. The provisions which are given in section 7374 as regards the penalties, exactly the penalty specified under section 122 subsection 2. And your second part of the question, can an officer issue notice without specifying 122? I do opine that it is a procedural lack, no, it doesn't alter. And I assume another question is implied in your question, meaning should the penalty be leviable at two times, meaning under section 7374, also under section 122. When we read section 122, another question comes. Section 122 clause 1 talks about certain offences which appear there is a overlap in section 122 subsection 2. So there has been settled position of law. Courts have consistently held that for a same offence, two types of penalty cannot be levied. So penalty will be under only one section, one provision, which is 7374 is a implementing section. It derives the power from section 122. Even if an officer issues a notice without mentioning 122, in my opinion, there is no harm.
Thank you, sir. Next question by Karthik.
Sir, if there are any blocked credit availed earlier, then if we intend to reverse now, should we pay interest at 24% under section 50, or if we have not utilized such inputs, can Patna High Court judgment to be relied upon? So the first thing is for erroneous utilization. Sir, you want to answer ITC related question?
I will answer. Thank you.
Go ahead, please.
As far as this is blocked credit is concerned, it is our opinion is 50 subsection 3 was earlier Patna High Court judgment came before this amendment to GST law. That is the provision to 50 subsection 1 was added. As far as the 24% is concerned, it is only applicable only when you are taking inadmissible ITC, excess availment of ITC on account of a matching concept as provided in section 42 and 43. So 42 subsection 10 and 43 subsection 10, what it says, only to the extent of output tax liability, it is reduced, then only you are liable to pay interest. So 50 subsection 3 will come into effect only when there is a matching concept is in line. So since matching concept is not there, so 50 subsection 3 will not come into effect now. Now coming to 50 subsection 1, whether we have to follow the proviso of 50 subsection 1, the proviso what it says, only to the extent the electronic cash ledger got debited, only to that extent we are liable to pay interest. So as far as this ITC what we have availed wrongly is concerned, so if we have utilized means that we have adjusted against our output tax liability, we are liable to pay interest at 18%. 18%. If it is not means, if you have not utilized means, it is our opinion that you need not pay interest. So this was also told indirectly in Reflex Industries judgment, Honorable High Court, Madras High Court. So hope I have clarified everything, sir.
Yes, sir. Thank you. Sir, query raised by Kasi Vishwanathan, sir. Please go ahead, sir.
Input tax credit. Whether an assessee has not claimed. Oh, okay, sorry, sir. Where an assessee has not claimed the input credit in the return for the financial year 1920 till today, can he claim it now while filing Form 9 at the relevant time? What is the option available? Sir, I presume that Kasi Vishwanathan sir has mentioned financially, since he has mentioned financial year 1920, you even now through 3B, very well the time limit as per section 16(4) is there, sir. The due date of availing the invoices at ITC pertaining to financial year 1920, you can very well avail ITC up to the due date of filing September month return, September 2020 return, which will fall on October 20th. So naturally, you will not be filing annual return for 1920 before that. So I got that you need not wait for 9 for availing that ITC. You can very well avail in the GSTR 3B itself, sir. The time limit is available up to September 2020 return due date. That is 20th October 2020.
Sir, you answered for earlier year also, because his next question says that can an auditor allow in GSTR 9? So as if you please correct, or you can put the year 1718 as 1920.
Right. So as far as 1718 credit, it is time limit is barred, sir. You cannot avail. So by virtue of 16 subsection 4, if it is for a 1718 credit means, then 31st March to due date of filing the March 2019 return, which fall on 23rd April 2019, I presume to be so. So 23rd April 2019. So it has already lapsed. You cannot avail. Next one is in case of 1819 is concerned, 2018-19 is concerned, that also time limit has already expired, because that is the due date of filing the September 2019 return, that also lapsed. So through GSTR 9, you cannot avail ITC. It is only to the highest judiciary, going by the principle of natural justice, by saying a lot of case laws which we have put in the session. You have to go through the principle of natural justice at the highest judiciary forum. Minimum high court you have to approach for availing ITC.
Okay, sir. So next question by client info. He has raised 3 questions, sir. Let me read it. Every RP has to watch their previous months from the beginning of the year, GSTR 2A, if there are any invoices that has been updated. Next, can a service provider raise pro forma invoice first, and then on receipt of the payment, issue original tax invoice? And can I avail RCM paid by me as a RCM ITC in the month itself, or only in the next month? Same query by the same person, sir.
Okay, sir. As far as 2A is concerned, every month you have to watch the 2A, sir, which I have told as a system. While making the payment, while filing the GSTR 3B, 100% you have to download the 2A, and as per the existing rule, of course, for this COVID period, it was relaxed there. As far as the rule 36 sub rule 4 is concerned, you are allowed to take ITC only to the extent auto-populated in your 2A, and plus 10% you can take it. That you have to do for the first question, sir. If 100% you have to watch. What value addition we can tell to you, sir? Sir, you have to ask your client that before processing the payment for their vendor, ask them to verify whether they have uploaded in that GSTR 1 and it is getting auto-populated in your 2A, or at least restrict your payment. You retain the GST portion and ask them to make the balance payment. So at least only when it comes in your 2A, you can make the payment. Can a service provider raise a pro forma invoice first, and then on receipt of payment issue original tax invoice? Sir, section 31 read with rule 46 does not contain any such provision in the GST law. Tax invoice has to be issued as far as service is concerned by virtue of section 13 of the CGST Act, which speaks about the time of supply of services. And as far as 31 is concerned, it is telling for a service provider within 30 days from the date of provision or completion, invoice has to be issued. So there is no concept of pro forma invoice. We cannot follow this, though predominantly in service industry like chartered accountants as we have a thought that whether that guy will pay or not. So one option is for them, we have to write it up as a bad debt. But one option is in this pro forma invoice you cannot issue, sir. You can issue only tax invoice. One suggestion we can give you is for the services that you have rendered within the financial year 1920, that is from April 2019 to March 2020, for the services you have raised an invoice to your client. If the client is not, you can sense that the client is not paying you the money, then better issue a credit note before filing September 2020 return. At least the GST portion it will be saved, sir. Right. This is as far as that is concerned, sir. Next question.
Yes, sir.
Next.
Yes, sir. Question raised by Karthik Kumar. You can see it in the display, sir.
Right.
Sir, you want to answer?
Sir, you answer, sir, please.
Cab service provided in the month of October to December, invoice raised in the month of February, and the payment received in the month of April. Clarify the due date. Sir, as far as cab service is concerned, it is brought under reverse charge mechanism with effect from October 2019, and there was a clarification given by the board in the month of December 2019. So going by time of supply provisions of section 13, it says that as far as reverse charge in case of services is concerned, you need to see the date of payment. In case payment is earlier of date of payment or 60 days from the date of invoice given by him, whichever is earlier is the time of supply. And as per your question, the service is received in the month of October. Service provided in the month of October to December, 3 months he has provided the service. In case you have made the payment received in the month of April, so payment date is very much late. So for 3 months, when he is receiving the invoice, October, November, December, according to section 31, within the time prescribed time limit, when he is giving an invoice, from that invoice date, 60 days you need to see. So on the 61st day becomes the time of supply. Suppose for October, November, 2nd December, assuming that you have has given the invoice on 1st October or 31st October, 31st December 2019 will be the time of supply. Before January 20th, you need to make the payment as a receiver. He will not charge, assuming that he is not a body corporate. Means that the receiver is a body corporate. Other than body corporate, forward charge would come. The usual provision of forward charge provision would be applicable.
Okay, thank you, sir. So only we have 4 to 5 queries left out, so we shall go ahead since it is running out of time.
Please.
The question by Sanjay: if builder has opted for old scheme, yes, you can read it, sir.
If builder has opted for old scheme and has got 2 business, real estate and renting of immovable property, then he can avail ITC on the construction material against the output liability of the renting business. Right, sir? So I presume that he is following the old scheme. So he is going to charge tax. Okay, he is in the old scheme. So this is if the construction of the immovable property, if he is constructing now, that immovable property on which he is following the old scheme, that is, he will be charging 18%, I presume to be so. So if that immovable properties are going to be used as a renting of immovable property purpose, then the question asked is on behalf of the real estate promoter. Can that real estate promoter can avail ITC? He can very well avail ITC, no issue. As far as the receiver who is going to receive that property and he is going to let it on hire, whether he can avail the ITC, our opinion would be going by the verdict of Honorable Orissa High Court judgment in Safari Retreats Private Limited case. You can rely upon it, but one thing is avail the ITC, but don't utilize. Have it in, but once the Supreme Court comes out of a decision on this, after that you can utilize it, but inform the proper officer accordingly. So that would be the advice, which I have already told in the session itself. This is one thing. As far as this is concerned, you cannot utilize. That is what. And here I want to add is another thing. One of the AR judgment in Varalakshmi Mahal, they have told that the department view I want to share here. The department view is in case of Varalakshmi Mahal, they are telling that they cannot rely on the opinion of the Safari Retreat judgment because it is beyond their scope and jurisdiction. That is what they are telling. So our advice would be for this person who is buying an immovable property on which he is paying GST, that immovable property is going to use for renting purpose. Our humble suggestion would be avail the ITC to not to lose the ITC because of the time limit 16(4). Avail it, don't utilize it, inform the proper officer.
Sir, once again, I would like to supplement here. His question is, he is under old scheme and he has a rental income and another line of income, not the receiver perspective he has asked. He has asked for him only, right? So he has got a real estate business and he has got a rental income also. And he said he is under an old scheme. Only one more point I would like to tell here is that in case you are in old scheme, please ensure that in respect of ongoing project, you have filed annexer declaration to Commissionerate on or before 20th of May 2019. In case you fail to file that, your eligibility of ITC will be affected even for your construction business. See, for construction business, there is no denial of ITC provided you were in ongoing project. The ongoing project is eligible after 1st April 2019 only when you satisfy the conditions laid down for it. One of the important conditions for that is you should have filed a declaration before the proper, that is commissioner. If you are the jurisdiction under which you are falling, you should have filed a declaration. Only then that ITC is eligible. And as far as renting of immovable property is concerned, as Balasubramanian sir has told that whatever he has told for recipient perspective holds good for provider perspective. So that is the one thing I would like to add.
Okay, sir. Okay. So question raised by Kasi Vishwanathan sir. When my client stays in a hotel in another state and receives IGST bill, can he claim it? That is the question, sir.
Sir, this cannot be claimed, sir. This in the session itself we have told your client is staying in a hotel in another state. For example, I presume that your client has stayed in Bangalore and he is a person from Madurai. Then if he has gone for a business trip and he is staying in that hotel, means naturally by virtue of section 12 subsection 3 of the IGST Act, the hotel is supposed they are renting of immovable properties, residential and lodging accommodation services, which is in relation to immovable property related services. So the place of supply for that service would be where the immovable property is located or intended to be located. The hotel being located only in Bangalore, that will be the place of supply. And the location of supplier, the hotel person's location is also in Bangalore. He has to levy only CGST and Karnataka GST. So that you cannot avail ITC, in spite of the fact that you can ask him to put IGST bill. Okay, even he can upload in GSTR1 in B2B transaction, and when you put your client's registration number, only IGST will come. But there you have to mention the place of supply. So the place of supply is in the Karnataka. So ITC cannot flow to Tamil Nadu. It is a blocked ITC, sir. You cannot avail, sir.
Okay, sir. So next question by KSE, sir. KS Chandrasekhan, sir. Is it possible to avail ITC in case of 4 or 2-wheeler who is doing auto business?
Auto business means automobile business, I presume, madam, who is selling.
Trader. Trader, how much he can avail?
Automobile business. Automobile means I will take two things, sir. One is he is dealing in buying and selling of 4-wheeler and a 2-wheeler. 100% he can avail ITC. It is an exception to that blocked ITC. Very well he can avail. But if he is involved in automobile related service or some automobile accessories, means he cannot avail.
Okay. Thank you, sir.
So I will again, for clarity, I will again answer. Sorry, Chairperson, for the earlier thing. The earlier question, what KSER sir has asked, if his client is engaged in buying and selling of motor vehicle, means very well he can avail ITC. Since he has mentioned auto business, if there is an opportunity to presume that if it is an automobile accessories or automobile goods dealer, means he cannot avail ITC on the 2-wheeler and 4-wheeler.
Okay, sir. Question raised by Chinnaya Venkatraman, sir. Yes, sir, you can go through it.
Sir, you are answering?
No, you answer, sir, please.
For financial year 17-18, we have offered full year service income in form GSTR 9, which were omitted to be offered in 3B. And we have paid the tax through DRC 03. What about interest and penalty? Sir, as far as the income sale you have omitted in 3B, but you have disclosed in form 9, that time itself while paying through DRC 03, interest should have been paid. Because interest is automatic. There is no requirement of initiation by the officer. It is mandatory. Interest is always mandatory. So long as there is a delay in service income, at the time of filing GSTR 9, DRC 03, interest should have been discharged. In case it has not been discharged through DRC 03, kindly pay it through DRC 03 now itself by filing another DRC 03. As far as penalty is concerned, we need not, penalty will not come because so moto we ourselves have paid. So we can take the shelter given in section 73. Penalty would not come for this case.
Okay. Last question, sir. By Kasi Vishwanathan, sir.
Okay, I will answer. I will run through that. This charitable institution is running a college and a school, what is the GST effect on college fees and school fees collected? Similarly, hostel fees collected from the school students and college students. Right, sir. Sir, an educational institution. I presume that it is an educational institution. Educational institution means the institution who are offering preschool up to higher secondary or equivalent, and beyond higher secondary, who is providing an education which is recognized by the law for the time being in course. And the third one is a person who is providing approved vocational education course. All these three persons will be called as an educational institution. Any service by virtue of notification number 12/2017, CT rate dated 28 June 2017, any person who is providing a service by way of services by an educational institution, to its student, faculty and the staff is exempted, per se exempted. So the college fees, school fees and the hostel fees is exempted.
Okay, sir. Thank you. So thank you for your patient answering for all the queries. Now I request Mohana Sundaram sir, Secretary, to propose vote of thanks. Sir, your audio is mute, sir. Audio. Please unmute it. Yes, sir.
Hello.
Yes, sir.
Respected Chairperson, CA AK Abhinay Sri, respected guest of honor, executive member, SAC Chairman, CA DC Jain, respected speakers, CA J Saravana, J Balasubramanian, respected management committee members of Madurai branch, respected senior members, fellow members, junior members of Madurai and all over India, greetings to all. On behalf of management committee of Madurai branch, we thank our beloved speakers, our brothers, CA J Saravana and CA J Balasubramanian, who are accepted our invitation and deliver excellent, detailed, informative presentation on offense, penalties, arrest provisions in GST, and value additions to clients through ITC. Sir, we are enriched by your meticulous, lucid explanations on provisions of in GST with judicial judgments. It is practically very useful to all the members. Thanks once again for your valuable input, sir. We request all the members to subscribe Madurai branch YouTube channel for getting updates and about forthcoming programs. Thank you all the members who view this program. Thank you. Stay at home and have a healthy life. Thank you.
Yes, sir. PPT,
Thank you, sir.
people are asking for the PPT. PPT will be mailed to the members regarding. Yes, sir. We shall end the session, sir. Thank you.
Thank you.
Thank you for that.